Judy Steele. You are now live. Woohoo! Stop recording. Get you down here. Get you up here. Well, let's get this party started in here. All right, that works. Looks cool. Oh, bloody right, then here we go. Hey, Larry's here. First one to join in. How's it going there, Larry? Jay, what's happening? Boston Ron. Dude, I haven't heard from you in a while. Boston Ron. Dennis is here. How's it going, Dennis? Brandon, how you doing? Awesome, awesome. Mark is here. How's it going there, Mr. Mark? Sterling, Felix. How's it going there, Felix? Sterling, Felix? Is it Felix Sterling or Sterling Felix? I don't know. C joined. Boston Ron. There we go. There we go. All right, getting ready to get started. What is today? Today is week. Uh-oh, we gotta change the camera. Joe, looks like Tony Hawk down bad after a short sale. Okay, interesting. Not quite sure what all that means. Come on. Come on. Here we go. James Byers, how's it going there, James? Hey, New York City Boutique. How's it going? Okay, Dennis, how you doing? Awesome. Just getting ready to get started. Just all getting signed in. Getting signed in. Good, wonderful. I don't have all. Yeah, I'm going to have to move this camera back. That's what's wrong. The camera's too far forward. All right. Turn. There we go. And there we go. Now we get almost everything in. All right. Evening all. Simba, how are you today? Fran Gomez, how you doing? I like that Joey Tribbiani thing going. Yo. Bama Redneck, yo, what's happening? All right, so why is this one not getting the whole screen? That's why. There we go. Bloody hell, get in there. All right, that works. But that one over there is not working properly now, so let's get that one fixed. Joey, hey, what's your thoughts on Vail? Vail is going to be a no. Tribbiani mentioned. There you go, Miss Fran. Gotta like Joey. Okay. Here we go. Ready to roll. Some of the comments in the live are going to be filtered to protect the innocent. Why? Marathon Mom. I have no idea. What are we asking why for? Thoughts on Walmart. Ooh, Wally World. Let's take a quick gander at Wally World. Now, Marathon Mom, what are you talking about? I wasn't quite there. There we go. What are my thoughts on Vail? Oh, okay. Well, let's take a look at Vail and I'll give you my thoughts. But I could probably tell you right now, save a lot of time and aggravation. Okay, I've looked at Vail before. V-A-L-E. $10.50 for Vail. GD, good evening and how are you today? All right, so we're going to back up a little bit. Go to Yahoo Finance, look up Vail. What the hell? Okay, so why is that not working? All right, V-A-L-E. All right, give it a second. Vail's going to pop up. I lost 10,000 on options. Ooh, who is that? Camera straight right there we go. Alrighty, camera right there we go. How is ASTS? Never heard of ASTS, but I'll write it down. We'll take a gander at it. ASTS. Right now I'm taking a look at Vail, V-A-L-E. So give me a few minutes while I look at Vail. Historical data. So I always want to go to historical data first because I want to find out how well they pay their dividends. Okay? Maximum amount of dividends. Here we go. Yeah. All right. So 2003 is when they first started paying dividends. All right. Mark, good evening. Bama Redneck. You lost 10,000 on options because you were buying, not selling. Okay, that wasn't me. I was reading someone else's post on. Wait a second. Let's go over to YouTube and find out exactly who that was. Master baiter of the bait. Well, alrighty then. Master baiter of the bait. He lost 10 grand doing options. Now, I've never heard that name before, so I have no idea who he is. So, let's take a gander at Vale, V-A-L-E. For some strange reason, something doesn't seem right here. All right, 2002, they were at 6 cents. Then they cut their dividends to 4. Then it went to 5, to 4, to 6, to 11. Okay, fine. Then by 2005, so apparently they pay a dividend every 6 months. Okay, 2 in 04, 2 in 05, 2 in 06, 2 in 07, 2 in 08. But look at the numbers. Okay, take a look at the numbers. 2003, it was 4 cents. Then it went to 5. Then it went back to 4, to 6, to 11, to 17. Okay, fine, it's going up. But what happened here in 2006? It goes from 17 to 13. Back to 17 to 26 to 30. Then down to 24 to 33 to 19. 38, 58, 59, 44, 14, 19, 10, 5, 13, 15, 40, 35, 156, 69, 6 cents in 2022? Yeah, this is one of the reasons why I don't like Vale. The consistency on their dividend increases is pitiful, in my humble opinion. Scott wants to take a look at Cisco, CSCO. CSCO. Written down. We'll take a look at it, Scott. Barely 1% on Vale anyway, and it's at a 52-week high. Okay, well, they pay a dividend every 6 months. Number one, I don't like the dividends. 24, 23, 22, 21, 20. Only one dividend in 2020, one in 19. 18, 17, 16, yeah, okay. All right, I don't like it. Sorry. Let's go take a look at Vale. Okay. So here we go. 1058. The 1050s are 13 cents. 1058. If I buy it at 1058 and I sell the 1050s, well, I'm losing 8 cents right off the top. You take 8 cents off of this 13, you're walking away with 5 cents. That's not even 0.5%. I'm going to say no. Sorry. Got into RKLB in the same field as ASTS today, 8 to 10% weekly premium, but no dividends. Good. All right, let's take a gander at it. RKLB. RKLB. Rocket Laboratories. What the hell are you thinking? No dividends. That's a big ass jump. You got into it today? Okay. Good. Explain to me. All right? In a manner in which I'll understand. Okay? Here's today. Okay? Thursday she jumped up. Friday she gaps up and keeps on going up. And she goes up again today. What made you think it was a good idea to jump in again today? I mean, that's got profit written taken all over it. You know, hey, come take some profit. A week ago, you're at $4. Now you're at 7. That is almost a 80% increase. Okay, from $4.79 to $7.19. That's a $3 increase. Well, $3 on a $4 stock. That's almost an 70 to 80% increase. All right. All righty. What does Gut have to say? Good. Got into Arvid Cake. Yep, look at that one. Thanks. ASTS is also around 10%. Just saying. ASTS. Yeah, Double hell no. Okay. But, couple of months ago at $2 and wow, that must have been nice. What is that? AST Space Mobile. Really? AST Space Mobile. $2.40 a couple of months ago. Then from $2.40 it shoots up to $38.60. Well, that's awesome for people who have that situation at hand. Now, this is not something I would ever look at. Okay, I'm not looking for capital appreciation, go from $2.50 to 38 bucks. Okay, there's got to be profit taking sooner or later. Scott wants to take a look at Amazon. Now, Amazon, AMZN, they don't pay dividends, which means they don't share their profits. This is not one of the companies I would prefer to look at. Okay, I like companies that have a consistent cash flow. Well, Amazon has been operating at a loss for decades. They're not even making a profit. They're just having so much cash flowing, it doesn't really matter if they're profitable or not. It's crazy. All right, so Amazon had a high at 200, bottom here at 110, shoots up, a little bit of pullback here, then shoots back up yet again. So let's take a look. Last 30 days right here. So here's your last 30 days for Amazon. Okay. 30 days ago at 182. Tops off at 191. Big drop down to 152. So it goes from 191 to 151. That's a $40 drop. That's a big drop for a $190 stock. 40 bucks would be 20%, is that about right? But look at the run up. There's a possibility that this gap right here is going to fill so it could keep going up. But I don't do Amazon because Amazon doesn't share its profits. So that's a no for me. 30-year contract and going ghost. Will never own an iPhone again. All right, B, I have no idea why you say that. Rocket tab. Rocket tab is going to the moon. Well, jolly good, and you have fun going with it. Got in at 670. Okay. RKB, he was shopping that premium. RKB. RKB. Can't find that symbol. So what it says. Wow. It's because WSB bumped the hell out of it. It will jump down to around 5. Okay. Been investing since 4. 4? Like when you were 4 or 4 o'clock this afternoon? Or the 4th of whichever month. ASTS, Space Mobile Phones, crazy profits, and new contracts. Okay, cool. I'm new, getting into investing, been doing good with GE Aerospace. What do you think of GE Aerospace? GE Aerospace. GE Aerospace. Interesting. Okay, it's at a high at the moment. I don't know if it's GE Aerospace. There it is, GE. I always thought GE was General Electric. I love your techniques. Please, what time do you come live? Every night at 9 p.m. Well, it's usually 9:05, 9:06, 9:07, somewhere in that area. I think about it at 9. All right, so let's take a look at the dividends for GE Aerospace. Okay, so they've been paying dividends since 2002. Started out at 86 cents a share, then went to 91, 96, 105, 120. Ooh, this looks good. 134, 149, And then they drop it to 48. So what makes you think going from $1.49 to 48 cents that's a good idea? Okay, then it goes to 58, 67, 72, 71, 20, 81, 26, 81, 91, 105, 110, 115. Then they cut it in more than half again. Well, they cut it in half again at 58. Then even worse than that, they cut it down to 5 cents. Oh, hell no. Sorry. 19 new questions. ET, energy transfer. Why does everybody like energy transfer? ET, energy transfer. I'm not looking at that. ET, energy transfer. Yeah. Now, energy transfer, don't get me wrong, it's an interesting stock, okay? It's not on my particular list, but it does give you some kind of interest. But here's the thing. Look where it is at the moment. Here's your 30-day bottom here. Your 30-day top is today. So, and it was a down day. So more than likely, this is going to start to come down. So ET might be good for next week or the week after. I'm going to write it down for next week. Energy transfer. Look at the numbers for energy transfer. 1630. The 16s are going for 33 cents. Okay, 1630. The 16s go for 33 cents. Means you're walking away with 3 cents. Yeah, no thanks. ASML. ASML. I'm going to say no to ASML for, one obvious reason. $932 a share out of my price range. Okay? I'm terribly sorry. It's just to be wasting our time looking at that thing. And you have fun going with it. Ooh, Hood. Now, I'm 100% certain that Robinhood, doesn't have 20 years of increased dividends. But if you like Robinhood, hey, more power to you. Look at the 1-year chart. There's the high, here's the low, here's where it was, this is where it is. Look at this run-up right here. That's a nice run-up. $20.30. The 20 is going for 55. You take the 30 cents off there, you're walking away with 15 cents. That doesn't work. The 2050 is going for 29 cents. Well, there is 1% there, and you get an additional pump up if it goes up to 2050. Okay, if you like Robinhood. I don't. It doesn't have 20 years of increased dividends. Okay, how many years of dividends does Robinhood actually have? HOOD. Oh, Robinhood doesn't have any dividends at all. There are no dividends in the selected time frame. Well, I like dividends because it lets me know how profitable a company is. Now, do I like a company just because it's a company? No. It's going to have some reasoning behind it, some logic. Okay, why am I buying Robinhood? What do I think? Well, if they don't have dividends, well, how do I know how profitable they are without having to read the annual report every single year? Also, how do I know when is it going to move predictably? Because stocks move for two reasons. Okay, is it a known reason or an unknown reason? Now, what is an unknown reason? An unknown reason is kind of like earthquake, natural disaster, hurricane, flood, tsunami, blizzard, anything like that that can devastate an area, tornado, hurricane. Okay, that's an unknown reason. You can't plan for that. That's like when the Exxon Valdez crashed up in the Northwest. We didn't plan that. It just happened. Same thing with the Gulf of Mexico when British Petroleum sprung a leak. Oil all over the place. Well, you can't plan for that. You only can react to it. Okay, great. That's a reaction. Well, what about something you plan for? Well, what can you plan for? You can plan for earnings reports, dividends, seasonality, anything that you can schedule. As a matter of fact, let's go over here, see what kind of things we can schedule. All right, dividends. Let's get rid of this. Okay, little green dots are the dividends. See them? Earnings. Oh, Look at that. Purple. Those are the earnings. Conference calls. No conference calls all month. Stock splits. No stock splits. An economic day event. None of those either. Okay, future liquidations, market drive, ETF dividends. No. Anyway, so dividends and earnings you can actually plan for because they happen consistently every single year. Now, stocks have a tendency to move up just before the dividend. Well, great. That's an indicator. We can use that. Earnings reports. I've always found earnings reports to be wishy-washy. Sometimes you see a good earnings report and the stock price goes down. Sometimes you see a bad earnings reports and the stock price goes up. Okay, there's no real definite yes or no when it comes to earnings. And then it comes down to the market maker. What does he plan on doing with that information? Okay, the market maker could take a look at the earnings report and says, you know what? I think I'm going to open up the stock price here. Because it's the only stock price that is controlled by one person and one person only, that is the opening price of the day. And that's the market maker. He gets to decide what to open the stock price for in the morning. So let's go over here. Now, let's get rid of the option chain. Now, see these numbers right up here at the top? This is the last traded price. This is the bid, the ask, the volume, the open, the high, and the low. Those are the only numbers you're going to need to look at when you're looking to buy stocks. Okay, what is the high of the day? What is the low of the day? What's the opening of the day? What is the closing of the day? How much has it changed? Is it positive? Is it negative? How much volume? Well, all those numbers are important in certain context. Okay, they don't mean anything unless you have something to compare them with. And who's this? Hicks. Hicks just joined us. Never seen Hicks before. Welcome to the show. 19 questions. Let's see what we got. ET. We just did ET. Can you check ASML? ASML. Okay, I must be missing something because I got this is like what the third stock that's over $900 that they asked me to take a look at today. Why am I looking at a $930 stock? Okay, $932. The 930 is going for 15. That's a nice premium. If you can afford, 100 shares at 932. 100 shares at 932, was that $93,000? Yeah, that's out of my price range. Sorry. ASTS, $4. ASTS, $4. I have no idea what that means. If you bought ASTS at $4, great. Good for you. What percent should I put toward HYSA versus stocks? High yield savings account. Ooh. High yield savings accounts are only what, 4 or 5%? It all depends on what you want to do with the money. Okay? Now, I'm not telling you what to do. All my money is in my trading account. I have hardly anything at all in the bank. I think I may have $500 in the bank. That's about it. Why else do I need money? I need it for my I don't really need it for anything because I got a credit card and a debit card attached to my trading account. So most of my money, 98% of all my money is invested at all times because I don't leave any cash laying around. But that's me. So shock a 615. I can't tell you what to do with your money. ASML. ASML. What is it with you guys in these $900 stocks? Do I really look that rich to you that I can afford 100 shares at $900? That's $90,000 per contract. Okay, what am I walking away with? $15. Okay, that's a nice premium. 932, losing $2, so I'm making what, $13.70 clear. $13.70 divided by the purchase price, $932, comes up with 1.4%. Okay, so 1.4% on a $900 stock. All right, well, James, I'm not 100% sure, James, you and I have ever talked. You wanted to be invited to speak your mind. Well, great. You have to DM me first so I can have a conversation with you. Okay? So anyway, ASML. We got this gap down here from 1,061, gap down to 980. Okay? That's $90 drop. Okay, that makes me a little uncomfortable. Sorry, but these numbers make me a little uncomfortable. If I got a stock at 1,072, and a couple days later she drops like 10%, it's only 10%. Lucky Larry, good evening. All right, sorry, ASML is out of my price range. Whoops, I missed a bunch. Let's go back. Where am I missing? Where am I missing? All right, ASML, out of my price range, sorry. All righty. Oh, Jerry, damn, you got a $100,000 drop in one night. Okay, Judy, yes, you do look that rich. Rich in life, yeah, maybe. Okay, I like to buy 1,000 shares at a time because I like to do 10 contracts at a time. I don't like doing onesies, twosies, some strange reason. Yeah, but $933 per share, it doesn't really work for me. What about EWBC? Oh, come on. Why can't you guys give me something decent? I haven't got EWBC. East West Bank Corp. Yeah, no, it's a monthly. Okay, see? Monthly options. What I'm looking for are companies that are consistently profitable and have weekly options. NVIDIA hit its peak. NVDA. I don't even know why you like this piece of crap. 130. Nope. Hasn't hit its peak yet. Its peak the other day was 140. Now you got to remember, a couple of months ago, before they did the stock split, NVIDIA was at $1,200 a share. But what you don't know, where is it? Where would it be? Analyze? No. Financials? No. All right. Heck with that. Let's go here. NVDA. Okay. This is one of the main reasons why I don't like NVIDIA. Okay. Let's take a look at what NVIDIA pays for dividends. Okay. June 11th, 2024. 1 penny. Last year, nothing, 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 nothing. One dividend they paid, and it was 1 penny. But wait, there's more. Let's look at statistics. Book value per share. $2. Okay, so you're paying $120 for a $2 stock. Boggles my mind why people do things sometimes. Hello, mighty people. What about Spotify? Usually 2% on a $30,000 to $32,000 contract. Now, I'm pretty sure, okay, good, I'm pretty sure you're a little on the young side. You keep coming out with this young stocks, okay? Spotify, S-P-O, Spotify Technology, 344. It's a little on the high side, okay? Look, here's your drop right here. It's your 30-day drop. You should have jumped in then. Look where it is now. It's almost at the 30-day high. Look at this big, huge gap. Well, that gap filled right there. See, it gapped up. A couple of days, gap back down, filled that gap. Got it over with. Now what are we doing? Well, now it's a little bit too high. Look at the last 30 days. Okay, 30 days ago was a 30-day bottom. A couple weeks later, 30-day high, she drops down, shoots on up. Here we are now. Okay, now it's a little too high for me. And it doesn't have 20 years of increased dividends. But if I was going to, 350 to 350 is not even 1%. Okay, look where the strike price is. $350. The 350 is 250, not 1%. And I don't even like that stock. Banks, MPW. I actually have some MPW. MPW. Okay. I'm going to take a quick look at MPW. First thing I always want to see, the high of the year, the low of the year. Where was it? Where is it? And what direction is it currently going? Cool. Once I do that, I'm going to take a look at the numbers. What am I buying it for? 466. The closest strike price is going to be the 450 or the 5. The 5's at 2 cents, ain't worth it. The 450 is at 20 cents. But you're losing 16 cents right off the top. Take 16 cents off the, you're walking away with 4. 4 is not quite 1% of 450. Okay? So it is what it is. I like MPW. Let's see what it looks like. Let's get the high of the year at 737. That was back in beginning of September last year. Got a double bottom at 392. That was in January. Last 30 days. Here's our 30-day high at 538, and she drops down to 410. I'm going to take a quick look at MPW. First thing I always want to see. There we go. Get the next video ready to go. So MPW, yeah, I do have some, and yes, I did sell the premiums against them, and yes, I did get over 1% before it dropped. Because remember, she opened up this morning in the 490s. Okay. Now I have the five. I have it. Wait a minute, I have it. 2 different accounts. Hold on a second. MPW in this particular account 489. Okay. 489. Wow, that's weird. I get 489 to one account, 489 in another account. Third account, MPW. What's this one? 493. Okay. Here's what it is. All right, let's get back to where we were. All right. All right, so that's MPW. I actually like MPW. We've been trading it for a while. She goes up, she goes down, she goes up, she goes down. She's floating around a certain area, and we like that because it's giving us a consistency. All right. Now you can almost see it. Let's get rid of this right over here. Let's get rid of this. Okay. If you take a look from October of last year to where we are currently, she stays between these lines right here and just keeps going. And I hate saying this, but she keeps channeling or going sideways. So yeah, she drops, you buy it. Higher, sell. Buy, sell. Buy, sell. Buy, sell. Buy, sell. Buy, sell. Buy, sell. So it is channeling stock, which means it stays within a certain price range. And this one seems to be 450. Well, no. Yeah, 450 to $5, between 450 and $5. Look how often it's done it. Okay, had the low way down here, and here's another high back. So here's where we are right now. I like MPW. I'll consistently trade it because it does give me a nice return on a weekly basis. Okay, banks. I like MPW as well. Cool. Scott Smith. Yep, I'm hanging in there with it. Hey, Hollywood's here. Bought some MPW last week. Selling covered call now. Dude, you missed it this morning. Hollywood. All right. Pickpocket. Hello. Doc's here. How's it going there, Doc? UPS for the win. MLB wants to take a look at UPS. Well, let's take a look at UPS. I like UPS. See how she looks this week. UPS. First thing, as always, the high, the low, where was it, where is it, and what direction is it going? Look at this, she dropped right here. This is the bottom of the year, and she's bouncing off of that. I want to take a good look at that because that looks interesting. But before I do that, what's the numbers look like? 129.14. The 129s are going for 104. That's a no. Not 1%, not worth my effort. There are too many other good quality companies that give 1% or more. UPS is not giving it to me this week. Take a look at the chart though. Look at the last 30 days. Okay, she had that big gap down. Okay, a big gap down, which eventually is going to fill. Now look what happened. There, down here's the bottom right here. It's like a week, almost 2 weeks going up. Today she pulled back a little bit. She actually gapped down this morning, but she pulled back a little bit. I would wait a couple more days to see what happens because hypothetically speaking, this gap right here should fill, which means she should be going to the upside. Only if everything looks right. And right now, it doesn't. Doc, I looked at Rich. Uh-oh. Missed some questions. Oh, wow. All right. All right, here we go. Good. Spotify has higher premiums and is 30,000, not 90,000 a contract. 30,000, not 90,000 a contract. Spotify, S-P-O-T. S-P-O-T. Try it again. Okay. So apparently you didn't like it when I said no the first time at 340. Okay, right now, the last price, traded price, 344. The bid, 344. The ask, 350. The 350 is going for $2.52. Okay, that is $2,500. Man, $250 per contract. That's what it is. $250 per contract. A little out of my price range. I don't like it. Okay, and it's way too close to the high. Look where last year. Last year it was at $1.28. All right. So $1.28 and $1.28 is $2.52. $2.52 is right there. That's doubled in price. Okay. You add another $1.28. That's tripled in price. Okay. Tripled in price in 1 year. Okay. Fine. Wonderful. I don't like Spotify. All right. It doesn't have. How many dividends does Spotify have? S-P-O-T. Historical data. Dividends only. There are no dividends whatsoever with Spotify. Spotify is going to be a no. Okay, I don't know why. We're continuing to look at it. If the designer t-shirt, yep. Spotify has okay, whatever. Robert wants to take a look at Paramount. P-A-R-A. Now, I don't think I have any Paramount this week, but I did buy some Marathon this week. Quick look. Here's my high, 1748. Here's my bottom, 952. A year ago, we're at 1469. Right now, we're at 1107. Simone, how are you today? What do I think about REI? Timberland, how are you? I've never seen you here before because I'm very good with names. But we're looking at Paramount at this moment in time. The $11.10 is the current price. Okay? $11.10. The 11 is going for 28. You take 10 cents off of that, you're walking away with 18. 18 on $11 stock is over 1.5%. I like 1.5% per week. That works well for me. Okay, a year ago, we already did that. Let's take a look at the last 30 days. which would be the 19th of July. Look what's happened since the 19th of July. The 19th was 11.60. She jumped up to 11.80, drops all the way down to $10.10. Then you have these 3 nice days to the upside. We're at 11.07. That all looks good. What are we missing? Well, we're missing seasonality. What does it normally do this time of year? For that, we move over to here, and here we go. This is a seasonality chart. Far left is January 1st. Far right is December 31st. The blue line represents the movement for this year. The red line represents 10 years worth of average movement. 2014, 2015, 2016, 17, 18, 19, all the way up to last year. So 10 years worth of data. What has it done this time of year? Basically, over the last 10 years. That's 2 weeks right there. It's 8/19, 8/28. So that's 2 weeks. This is the end of the month. Here's where we are right now. Look what happens usually. Usually it just goes flat, which is great for what we want to do. Now what we want to do is covered calls. It's one of the safest trading strategies there is. Okay, you buy a stock, you sell the option, you collect the premium. The premium is usually more than 1% per week. That's where we get our 1% per week, and that 1% per week is over 50% per year. If you're okay with 50% per year. Now, don't think that there's no work into it. Okay, 50% a year. Imagine. Well, you know. Okay, we're all adults here. We all know what we have at our disposal. I know it's in my trading account. You should have some kind of idea what you have in your trading account. Okay, if you take your trading account, let's say it's 50 grand. What's 50% of 50 grand? Well, that's 25 grand. Okay, if you're spending 20 minutes a day, because when I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader, this trading strategy was designed to be only 10 minutes. It's really not that difficult. Let me show you quickly how I do it and show you how quick it really should be. All right, so I'm going to my calendar. The only thing I want to look at is dividend stocks. Great. Let's look at September. Bank of America. Here we go. I actually bought some Bank of America this morning, just to let you know. First thing, high low is great, 39.55. The 39.50 is 47, over 1%. Great. Okay. There's a year ago. There's the bottom. There's the top. That's where we are. Last 30 days. Last 30 days. Great. 30-day high, 30-day bottom. Nice movement to the top and a nice upward direction. Seasonality usually goes this time of year. Sideways. Wonderful. Alrighty, I like it at 39.50, 39.50. There we go, right there. Get rid of this. Okay, 10 contracts, 1,000 shares, 39, blah, blah, blah. Confirm and send. Here's what the trade sounds like. Buy 10 contracts of Bank of America, 100s. Those are the weeklies. 23 August 24, that's this coming Friday. The $39.50 call strike. That's what I like. See what the strike with the purchase price is at the moment, $39.55. Well, if I do the $39.50 call strike, I'm making $430 on this particular trade. Okay, what does that mean? Well, here's my calculator. Clear that out of there. Put the $430 into that. Divide it by what is it costing me for this trade? $39,076. That gives me a grand total of 1.1%. So here's the details. Bank of America has been around for over 100 years. They got a Bank of America in every major city, almost every street corner in the United States. I really don't think they're going away. They've been in business over 100 years. I don't think they're a dividend king, but they do consistently increase their dividends. So, like a company that's over 100 years old, well, of course I do. Would I buy this one? Well, of course I would. I did. I bought some this morning. I got over 1% this morning, just like this particular trade there. It doesn't take that long to do it. Okay, let's try another one, just for the fun of it. Okay. back to where we were. Okay, so we just did Bank of America. Great. Now, in your head, calculate how long it takes to actually do this. Okay, so if you got your stopwatch, you ready? Okay, General Motors. Here we go. General Motors, GM. Okay, high, low, was, is, direction, cool. 45.76, the 45.50, 64, that's over 1%. Great. Last 30 days. Okay, there's the high, there's the bottom. Nice trend to the upside. Cool. Seasonality, what does it normally do? This time of year. Okay, she goes sideways for a little bit, then she peaks and she goes to the upside right towards the middle of September. Great. Wonderful. So let's do a covered call. Here we go. Covered stock. I like the 45.50s. The 45.50s right there. 1,000 shares. Cool beans. Okay. Buy 10 contracts. GM 100. That's the weeklies. 23 August 24. That's this coming Friday. The $45.50 call strike. My break even is 45.10. Current price is 45.76. So the stock can even go down and I'll still be profitable. Maximum I'm going to make off of this trade is $400. Clear that. $400. My maximum. Oh, see right here, maximum profit. See where it says right there, maximum profit, $400. Okay, it's going to cost me 45,000. Okay, 45,106. Now remember, this is for 1,000 shares. You can buy 100 shares if you want. This is not quite 1%. This is 0.88. All right, so I don't like the 45.50s. Let's try the 46s. Okay, let's not like that one. The 46s right here. Same thing, 630. I calculate. Damn it, my calculator's gone. Calculator. 630, divide that by, same price, 43. 43, sorry, 45,376. Okay, that gives me 1.38%. However, break even is 45.37, is currently at 45.76, and this is the 46 call strike, which means the stock has to go above 46 in order for me to make that 1.3%. Now, do I like 1.3% for Ford? Not Ford, General Motors. Well, currently, here's where we are. Okay, a 30-day bottom was here at 39. Now we're at 45.76, and I'm looking at the 46s. Well, it's got to go up 26 cents. So look where the 46 is, right there. It's not that far away. Let me zoom in a little bit closer. Okay, here's the run-up right now. Here it's 45.76, where we are now. The 46 is right there. It's not that far away. It's going to be 1.8%. Do I like Bank of America, General Motors in this situation? Well, I like General Motors. Okay. So, but did you see how long it took me to do that? It took me, what, 2 minutes maybe, 3 minutes? All right, Timberland wants to take a look at REI. REI. Ring Energy. All right, now you're new here, so no, I don't like monthly optional stocks. Okay, September, October, December, January, March, January, that's monthlies. I can only do it once a month. Once a month means I can only do it 12 times a year. That just doesn't give me enough money. Sorry. Because at 1.9, the 1.5 is going for 15, but you're losing 40 cents. Yeah, that's horrible. Those numbers are, okay, no. Sorry, just plain old no. Simone, how are you? What's your thoughts on WBA? Simone, you know, Simone, come on. You've been here long enough. You know I like WBA. Well, let's see what it did today. Now I actually do own some WBA. So, let's do this. WBA, Walgreens. The high of the year right there, the bottom of the year right there. That's where it was. This is where it is. It's a little bit of bump up from the bottom of the year. She's bouncing off it. Great, I love it. Take a look at the numbers. I can buy it at 10.88. The 11s are going for 6 cents. That doesn't work. That's not 1%. Sorry. Now, next week's, what does next week's 11 look like? The 11 for next week is 12 cents a share. If I want to carry it a little bit longer, so I'm making 1%, well, a little over 1% for 2 weeks, no, those numbers just don't work. Usually, Walgreens does good, but this week, not so much. Look where she is. All right, 30 days, here we go. Here's your 30-day chart. 30 days ago, there's your high, here's your bottom. 1, 2, 3, 4 days to the upside. Today pulled back a little bit. So what does that mean? Well, to me, it means like it's not really that good this week. Now, I like it because I do own some, and I have no problem buying some more if the numbers are right. Okay, Doc wants to take a look at Halliburton. I did buy some Halliburton this morning, in case you guys were wondering. Halliburton. I got in this morning at 31.96, just around 32. Cool beans. All right, let's check it out. First thing, as always, Halliburton, H-A-L. Here's our high, here's our low. That's where it was. This is where it is, and it's got a slight jump to the upside after the bottom of the year. I love bottom of the year. Bottom, you're going to make most of your money in the stock market buying low, selling high. You cannot get any lower than the low of the year. Now, do we know this is the low of the year? Well, let's zoom on in and take a closer look at it. Okay, here's the last 30 days. 30 days ago was the 30-day high. She dropped, retraced, drops again. Here's your 30-day bottom. Nice, slow upgrade. And we're sitting at 31.85. Okay, great. What do the numbers look like? Well, the 32.28 is the current price. The 32 is going for 31. I made my 1% on this morning. But at this moment in time, it's not looking as good. Because 32.28, the 32.50s are going for 14, not quite 1%. Okay, this morning it worked out nicely. Okay, it's just that now it's not working out so nicely. And you're going to find that. You're going to find that often. Where it looks good now, but tomorrow it may look as good. All right. All right, Jerry, we looked at UPS biscuits. Okay, biscuits, sound, S-O-U-N, S-O-U-N. Now, I'm pretty sure that's a no. Okay, and the reason why I say that, because we looked at it before. S-O-U-N. Oops, let's go down just a little bit. There are no dividends in the selected time frame. Sorry, biscuits, sound is a no. Sorry. I only like companies that have consistently increased their dividends. And the reason why is a dividend is the portion of the corporation's profits that are passed along to the investors. That's you and me. When we buy and sell stocks, we become the investors. So why would I invest money in a company that doesn't share their profits? Okay, how am I supposed to know when is a good time to buy? Because I buy all my stocks in direct relationship to when they pay their dividends. See these little green dots on this calendar? Each one of these green dots represents a company that has consistently increased its dividends and has weekly options, and that's when the dividend is being paid. So why is that important to me? Well, to me, okay, I've been doing this for about 20 years, and I have found that just before the dividend, here's GL right here, GL on the 4th, just before the dividend, okay, the stock has a tendency to go up in value. So if I'm looking here on the 4th, a GL, I want to buy it 2 weeks ahead of time, 1, 2, and then I want to buy it on a Monday, because I like to buy on a Monday morning, sell a covered call to collect my 1% on a Monday, and have the stock option expire worthless come Friday at 4 p.m. Okay, I come from a time frame where we went to work first thing Monday morning. Okay, got to sign in at 8 o'clock Monday morning. Okay, and Friday afternoon we get paid. 4 o'clock we're out of there. Monday to Friday. That's what I like. My work now consists of about half an hour sitting in front of the computer on Monday morning. Okay, and I do a couple adjustments here, a couple adjustments there. You've seen a couple examples I just did. Okay, and a couple of samples that I did. The couple of samples that I just did. Okay, I looked at the stock based on the calendar. Okay, based on the calendar, I took a look at the high, the low, the open, the close, where it is, where it was, what the dividend is. No, I mean not the dividend. Sorry. What the current stock price is, and what is the corresponding strike price's premium value. Is it 1% or more? It takes less than 5 minutes to do each stock. Okay, I can do one in about maybe 2 minutes, maybe less. Okay, it's really not that difficult. For the fun of it, let's do HPQ, Hewlett Packard. And set the timer. Let's set the timer. You ready? Where the hell is the timer? Okay, so what time is it now? 10:07. So 10:07. I want to wait for it to turn to 10:08 because I don't have a second hand handy at the moment. All right, Hewlett Packard. We ready? HPQ. Now, as soon as I hit the enter button, it's all going to change, and we're going to take a quick look, and we're going to see exactly how long it takes for me personally to take a look at things, and then see if it makes sense to you. Okay, here's the enter button. First thing I'm going to look at, the high, the low, where was it, where is it, what direction is it going, the pullback here, 34.60, the 35s are going for 24 cents, not quite 1%. It's going to be a no. Sorry. That was that quick. Why bother looking deeper if the numbers aren't working? Now, realistically, that took less than 30 seconds. Okay, let's find another one. OXY, Occidental Petroleum. OXY. You ready? 1, 2, 3, here we go. High, low, where was it? Where is it? What direction is it going? 57.70. The 58s are going for 24. Again, 0.5%. No, thank you. I don't like 0.5%. 0.5% is only 24% per year. It works for some people, but not for me. 60 new questions. Holy cow. Alcoa. Pickled Peanuts wants to do Alcoa. Oh, that was a good one. Oh, I love a good sneeze. Okay. Alcoa. Alcoa is AA. All right, so you ready? AA. Let's see how long I can do this. How long it takes. You ready? 1, 2, 3. High, low, is, direction. Nice. 33.92 to 34, 65 cents. Yes, I like it. A year ago, we were at 28. Bottomed out at 23. Double top at 45. Last 30 days. Right there. Nice move up. Ooh, that's kind of close to the high. Look at it. Nice movement. But can it continue to do that for another 4 days? If you like Alcoa. Okay, great. Let's take a look at seasonality. Seasonality. Next 30 days. Ooh, I like this. Check that out. That is unmistakably to the upside. Great. I like that also. What are we buying Macy's? Uh-oh. I'm going to take a look at Macy's in a second. So, I like that. So, let's go to covered. The 34s. 34s. Market order. Buy 10 contracts, Alcoa 100s, those are the weeklies, 23 August 24, that's this coming Friday, the $34 call strike. My profit is going to be $755. Divide that by my purchase price, $33,251. My profit on this one, 2.27%. What has to happen? Okay, 2.27%, what has to happen? Let's take a gander. Okay, so currently right now it's at 34. We're looking at the 34s. Okay, what does it have to do? Absolutely nothing. Stay right where it is, I make my money. If it goes up a little bit, I make my money. If it comes down a little bit, not so good, but here's the thing. Here's the thing. Now this is a little clue, which kind of might throw me a little bit. The last trade, $34. The current bid, $33.60. That's less. The current ask, $33.92. Both the bid and the ask are lower than the last price. What does that usually mean? That usually means the market maker is going to try to push that price down. Well, she gapped up this morning, okay, had a nice run this morning, and look how close to the high it's getting. So I'm a little uncomfortable. Now everything's pointed to one direction except for the numbers. Okay, that's the little clue. This one I would wait until the market maker opens up first thing in the morning. Just my opinion. But other than that, everything else looked great. And did you see how long it took me to do that? It took less than 2 minutes. Okay, and don't make it more complicated than it needs to be. Okay, first of all, you're looking at decent companies. Okay, I'm looking at good companies. Hold on, I gotta find out what this is. Hey, Neil Weston's back again. Neil, how are you today? Same place though, XOM I think. When are we buying Macy's? We're gonna take a look at Macy's in a little bit. Okay, I'll write Macy's down. All right, ASTS was a no. All right, so where was I? Okay, now when I say I'm looking at a certain stock, here's what I'm looking at. And I look at them based on the calendar. Okay, I don't separate them by industries. I don't put the oil stocks. I don't take the energy stocks. I don't take dry goods. I don't take consumables. I don't put them in different categories. I throw them in a calculator. Whenever they pop up, they pop up. All right? Able Model. Okay. Devon Energy. That's two totally separate industries. Coca-Cola. Well, now we're at 3 totally separate industries. T. Rowe Price. Well, now we're at 4 totally separate industries. You have soft drink. You have energy. Able Model. What are those? Consumer goods. And T. Rowe Price is financial. They all have their dividend on the 13th of September. Okay. I don't separate them. Duke Energy. Ooh. Duke Energy. I'll write Duke Energy down. Okay, we'll take a look at Duke in a little bit. Okay, Neil? Let me finish up here. Now, although I like Alcoa, they have been in business for over 100 years. They are a dividend king, which means they've increased their dividends for more than 5 decades. Great. What I don't like about it is this right here. It looks as if the market maker is going to push it down tomorrow, and there's good evidence. Because look where the bottom is, down here at 27. Look where the top is, 35.40. Well, it's at 34. It means it's got $1.40 to go to get to the high. Okay, there's a good possibility that from 27 to 34, 27 to 34, that's a $7 increase. $7 on a $27 stock, 7 divided by 21. That's 3. That's over 25% increase. Okay, they could be profit taking tomorrow. Could very well be. Okay, if it wasn't for that number right there, I'd say hell yeah. But that number makes you say, wait a second, I want to see what the market maker does tomorrow morning. Okay, Mark wants to take a look at Starbucks. SBUX. Now, you guys know that I used to have Starbucks. After that big jump, I got bought out. I'm perfectly okay with that. I made my money off of it. Not a big deal. First thing, again, as usual, Starbucks, SBUX. A year ago, we're somewhere at 97. The high of the year, 107. The bottom of the year. Okay, so that's all hypothetical. Let's go back to see where we were. Alrighty. All right, so there we go. So that's Starbucks. Now, take a look at the last 30 days. Okay, last 30 days, here we are. What is that telling you? Well, 30 days ago, we're here at 74. We bottomed out at 73. Get this big, huge gap, brings us up to 96. So from 73 to 96, that's 23 bucks. That's a big jump for a $70 stock. Biscuits, I have some, but he will not like because no 20-year dividend history. You're probably right there, redneck. All right, Jackson. What do I think about SPY? SPY. I don't think the spiders actually have dividends, do they? SPY. Spiders. Ooh, they do have dividends. Imagine that. Okay, so now spiders have been around for a long time. All right, so we don't need to know how many years of dividend increases they have because the dividends actually don't look that bad for the spiders. Okay, 97, 30 cents, 35, 38, 31, 35, 36, 39, 32, 41, 37, 35, 37, 35, 38, 41, 32, 35, 37, 39, 33, 35, 48, 4, 35, 36, 40, 52, 40, 41, 47, 35. It's up and down. Okay, see it goes up and down, up and down, up and down. No consistency. Okay, 56, 58, 79, 55. That's a big drop. 79 to 55. 66, 72, 78, 64, back down again. 67, 69, 72, 56, 52, 51, going backwards. That's not good. So if you continue looking at the dividends for the spiders, they're kind of like all over the place. That's one thing I don't like about them. What else don't I like about the spiders? Well, here we go. So far this year, the spiders are offering you. You ready for this? Who said spiders? Jackson, you ready for this? Okay. At this moment in time, okay, the stock price for the spiders, SPY, is $554 per share. All right? Look what you're earning per share on spiders. 1.24%. That's 1.25%. I'm showing you how to get 1% per week, and you seem to be okay with 1.24 for the year. Not quite sure I can help you out there, brother. Okay? I'm missing some questions. Yes, I am. Yes, I am. All right. What calendar is he looking at? All right, EK, you're asking what calendar am I looking at? This here is, let's get rid of this. Come on. Why is it so slow? That wasn't right. There you go. Think or swim. Charles Schwab. Hey, look at this. I'm negative $32,000. Ha ha ha! What this account? No idea what that means. Yep, that's that. All right, so let's get back to where we were. So that's Starbucks. I like Starbucks, but I no longer own Starbucks because after this happened right here, right, the option that I sold against it got exercised. They bought me out, and I'm back into cash from that situation. Well, that was last week. Well, this week I'm back into a different position with the same amount of money. All right, so that's Starbucks. I wouldn't do it now because this has profit taking written all over. Look at this big, huge gap. This gap is going to fill eventually. Baby's going to come down, then she'll go back up again. So I'm going to put Starbucks for 2 weeks out. Right there next to Nike. Okay, Starbucks and Nikes the next 2 weeks. All right, let's continue. Can we do SPY? We just did SPY, didn't we? SPY. SPY. Now, I don't do the spiders for several reasons. Number one, it's out of my price range. Number two, look at where she is. Here's your 30-day high here. Here's your 30-day bottom. Now, it's way too close to the 30-day high for me. Okay, and the 560s are going for 270. You see that? Current price 559. The 559 is going for 328. That is not 1%. Okay, so 559.89. So you look at the 560, 274, not 1%. That's a no. Sorry. Nvidia, yay! Bob, no. Sorry. Nvidia has a 1 penny. Bob, 1 penny dividend on a $120 stock. $120 stock. Okay, what are you getting from it? Well, you're getting 4 cents a year. Seriously, what the hell are you thinking? 4 cents a year on Nvidia? Anyway, let's continue. Larry, AST. Has no options, no thank you. Ooh, Dollar Tree, DGD. Dollar Tree, wait. Yeah, DLTR, Dollar Tree. Okay, now Dollar Tree, I don't think they'd have 20 years of dividends either. DLTR. Okay, Dollar Tree, historical. I like looking at historical data because it tells me how often these companies have actually paid out a dividend. No dividends for Dollar Tree. Dollar Tree is going to be a no. Now, Dollar General, different story. Randall Ray. Randall Ray. DTJ doesn't have any dividends. Okay. AST is not 20-year-old company. Yep. Nope. Can you do CAVA? C-A-V-A. C-A-V-A. CAVA Group. Okay, interesting. No. Reason being, look where it is. All right. Now, don't get me wrong. I know nothing at all about this company. It's not on my personal list. But look at the run-up from 72 to 100. That's $28 run-up on a $72 stock. 20 run-up on a $72 stock. That's over 30%. That's a big jump. Can I get an explanation on what's going on? Dirty Dingo, how are you today? What's going on? Well, Dirty Dingo, here we are. We are here at Dividend Stock Investing. Dividend cap, what do you call it? Give me a second. I'm running a blank. Dividend Stock Talk. Investing in dividend stocks for a safe, predictable, consistent 1% per week. Now, 1% per week comes to over 50% per year. But it's not free. It's not simple. It's not easy. The trading strategy is simple. Okay, it was created for a 9-year-old. And the criteria that I had to overcome, simple, safe, predictable, consistent, and no way to lose. Well, that's wonderful. Okay, but there are a couple of rules to go along with it. Rule number 1, never buy something you do not understand. If you cannot give me a 20 or 30 second elevated pitch as to why you're buying something, what you plan on getting out of it, how long you plan on holding it, and what your reasoning for buying it is, well, don't buy it. If you don't understand it, don't buy it. If you don't want to buy it and hold it for a very long period of time, don't buy it. Always go into buying a stock as if you're going to hold it for the long term. This company right here, that's at the high of the year. No, thank you. I do not buy at the high, waiting for it to go higher. I don't do the thing. Higher. No. I like to buy it low. See, look, she's here. She dropped down. There's your 30-day bottom. 1-2 days to the upside. This is where I want to jump in here and then take that pony ride. Yeah. Buy low, sell highs. Rule number 1, never buy something you don't understand or you don't want to hold on to. Rule number 2, never sell at a loss. Kind of defeats the purpose. Rule number 3, make sure the company is consistently profitable. The safest, easiest way to find out if they're consistently profitable, well, go right to the dividends. Number 1, I don't want to do a company that doesn't share their profits. Okay? I'm not looking for capital growth. I'm looking for cash flow. Cash flow, you can only get that consistently with a dividend stock because it's every 90 days they pay a dividend. Great. And if they have weekly options, double great. Because now weekly options allows me to trade this stock every single week. Okay? Now the dividend is the portion of the profits that the company makes that they give to the investors. So if that increases every single year, well, then they're consistently profitable. It's actually that simple. If you remember Cliff Notes from the 70s and 80s, instead of reading the whole book, you got Cliff Notes, like 20 pages, and gives you the whole idea of what's going on in the book. I remember that in high school, Cliff Notes. Anyway, it's a shortcut to find out if they're profitable. If they're consistently increasing their dividends every single year, well, they're consistently profitable. That's the only place I want to put my money, in a company that is consistently profitable. That you can find out just by looking at the dividend. Okay, so how do you find good dividend stocks? Simple. They've been doing it so long, they actually put them in categories. You have category number 1, the cream of the crop, the dividend kings. 5 decades, 50 consecutive years of increased dividends. Well, great. Those are the companies I want to look at. Well, you have the dividend aristocrats and the dividend champions. Both of those, 25 years or more of increased dividends. Not quite 50, but more than 25. And then you have the dividend contenders. That's 10 years to 24 years of increased dividends. And then, of course, we can throw in Warren Buffett's list just for the fun of it. It's that 5 list: dividend kings, aristocrats, champions, contenders, and Warren Buffett's list. Those lists right there will give you over 300 different companies that have consistently increased their dividends for more than 20 consecutive years. Not every once in a while, every single year. Year after year after year. Okay? Those are the only ones I want to look at. Okay, and they got to have weekly options. This is about 300 of them. You take those 300 companies, you throw them into the calendar. Okay, calendar. Each one of these green dots represents a company and their EX date. What is the EX date? The EX date, 4 dates to remember when you're trading with dividend stocks. Date number 1, when are they paying? That's the announcement date. Date number 1. Date number 2, the EX dividend date. The EX dividend date is the last day the stock trades before the dividend's paid out, represented by these little green dots, okay, on the calendar. Now, date number 3 is the date of record. Drazik, how are you doing, dude? Holy cow, it's 10:30. It's not 11:15 yet. What you doing here early? Just giving you a hard time, brother. All right, date number 3, the date of record. Date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, self-explanatory, the payment date. 4 dates to remember the dividends. So why are dividends important? Well, number 1, it tells me how profitable, not how profitable, how consistently profitable they are. I'm looking for consistency, predictability, and safety. I'm 60 years old. I'm retired. I do not want to go back to work. Okay, I have enough money to live off of very comfortably of 1%. So if I get 1% per week, I'm comfortable. Think about it for a second. $50,000, 1% a week, that's $500 a week, or $25,000 a year. $100,000 is $1,000 a week, or $50,000 a year. $200,000 is $2,000 a week, or $100,000 a year. Okay, 1%, it's all I'm looking for. Now, why am I looking at dividend stocks? Well, because they're predictable and they're consistent. Every single year for the past, hold on, let me think about it. AIG, okay? Every single year for the last 100 years, AIG has been paying a dividend. I don't know if they consistently increase or if they pay back, whatever. But the company's over 100 years old, okay? They consistently increase their dividends. Coca-Cola, over 100 years old. Pepsi, over 100 years old, consistently increasing their dividends. That's why they're on my list. So why do I look at the dividend? Because, MTD, 2 weeks. I buy it 2 weeks before the dividend because the stocks have a tendency to increase in value before the dividend. Let's take a quick look. Let's go back to August. Citigroup. Here's a good one. Let's take a look at Citigroup. See it right here? Why is it not opening up? All right. We're going to take a look at Citigroup on the 5th of August. Okay. No. Yeah, 5th of August. Citigroup. Now, I want to go 10 days prior to the EX date, which is the 5th of August. Where's the 5th of August? 5th of August. Okay, so here's the 5th of August. Kind of like a bat with a pick, right? Here's the 5th right here. 10 days prior to this date. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right there. 10 days. All right, what is the dividend? Hold on a second. Hold on a minute. What are we looking at? C, dividend. 56 cents. Great. All right. Here is the opening of the day. 65.14. And the dividend is 56 cents. So, 65.14 plus 56 is going to be $65.70. All right, so the dividend 56, the opening price 65.14. Add the two together, and that is 65.70. All right, that's the price I'm looking to get out at. So the high here was 65.65. Nope. 65, 65, 65, 65, 66 right there. So 1, 2, 3, 4, 5, 6, 7 days. That's 1 week. 7 days. You'd be in, out, 7 days. Does it happen all the time? Most of the time it does. Stocks have a tendency to go up before the EX date. Can I get an explanation on what's going on? Okay, Dirty Dan, I hope that helped out. What is the bid and ask price? Brian, the bid and ask price. Simply put, you ready? Let's get out of here. Let's go here. Let's go there. Now, let's look at the top line right here. Top line, that is the stock information. The very first number you see over here on the left-hand side top is called last. What does that mean? Well, that's the last traded price this afternoon. Because today's Monday, it is a trading day. Okay, the last price was the last traded price or the closing price of the day. Okay, the bid 61.90, the ask 62.02. What is that? About 8? I mean, that's a 12-cent spread between the two. Let me briefly explain what the bid and the ask is. Let's say, hypothetically speaking, you go to the corner store, your 7-Eleven, your Circle K, your Quick Mart, whatever it is. Okay, there's a corner store. Everybody has one. Okay, go to the corner store. You're going to walk into the corner store, grab a gallon of milk, loaf of bread, some eggs, whatever. And then you're going to buy them from the person who owns the store. Well, he has to get his profit somewhere, and you know he owns the store. He doesn't actually have cows, he doesn't have chickens, and he doesn't have a bakery for the bread. So he's got to get it somewhere. He buys it from whoever. Okay, we sell it to whoever, he buys it from whoever. He pays the bid. Okay, this is what the market maker pays, $61.90. Now, if I want to buy it, this is what he sells it to me for, $62.02. So let's get back to the corner store owner. So let's say hypothetically the corner store owner buys his milk from the milkman. He buys it for, let's say, $3 a gallon. He sells it to you for $3.50 a gallon. The difference between the two, the bid and the ask, is called the spread. The spread goes to the owner of the corner store, or in this situation, to the market maker. Who's the market maker? Don't know, don't care, but that's who you and I are buying and selling from. Each Each company has its own market maker. Okay, so the market maker may be Patty Stranges from Illinois. I don't know. But there is someone who is buying and selling. This is what they're buying it for, this is what they're selling for. If I want to sell my shares, this is what the market maker is going to pay. If I want to buy some shares, this is what I'm going to pay. Do we need to know who the market maker is? No. Do we need to know who owns the grocery store when we go in there to buy a gallon of milk? No, we don't need to know. All we need to know is the milk fresh and what's the price. Okay? So, is it the stock and what's the price for it? Well, there's the price right there. Okay? Same thing with the option. Interesting thing. The stocks usually get traded in New York at the New York Stock Exchange. The options down here, see the option chain, all this down here is the option chain, usually traded in Chicago, Chicago Board of Options Exchange, the CBOE in Chicago. Stocks, stock market, New York. New York, that's still on the same page. Do I care who the market maker is? No. My only concern is, what price am I buying the stock? What strike price am I selling the stock? What premium am I collecting, and is that over 1%? That's what I'm looking for. I'm looking for 1%. Safe, predictable, consistent 1% per week. That's my goal. Chad, nice to see you again. Hola, hola muchacha. Andrea, but I have traded it many times. All right, Andrea, I'm a little lost what we're looking at. What are we talking about, Andrea? I'm going back, I can't find it. Sorry, Andrea, there's way too many questions. I don't know what we're talking about. Covered call, blah, 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 blah. Larry Purcell. Is it true you're not collecting dividends if you only own the stock for 1 week? Context, Larry. All in context. Let me give you an example or an explanation. Okay. August. Today is August 19th. Right here. August 19th. This is where we are. Chevron and UPS pay dividends today. Okay. Now, let's say hypothetically you want to buy a company. Stock. Walgreens. Perfect example. Right there. Walgreens. Walgreens is paying a 25-cent dividend. Just so happens to be 2% of the stock price. Cool. If I want to collect the dividends on Walgreens, I have to buy it before the EX date. Another reason why these dates are important. Here's the EX date. If I want to collect the dividend on Archer Daniels, Aflac, Target, or Walgreens, they all have their dividend on this date right here. I would have to buy it today, the 19th, tomorrow, the 20th, the 8th, the 7th, the 1st, the 30th, the 15th, the 12th, any day before the EX date. You got to buy it before the EX date and then sell it or own it into the date of record. Because the date of record, whoever owns the stock on the date of record is entitled to the dividend. Hopefully that answers your question. And you don't have to own it for a week. When I grew up, I thought you had to own it for a year before you collected dividends. No, you only have to own it for a day or two. Okay, Ricky wants to take a look at Nike. Nike motorcycle. Nike, okay, trade. Nike. NKE. Here we go. Nike. First thing, as always. Always. High, low, where was it? Where is it? And what direction is it going? Look at this gap down. What happened after that? Now, when this thing dropped, I bought some of these because I love that drop. Okay, but let's take a little closer. Right now, the current price is $83.49. $83.49. I'm really looking at the 84s. Not quite. 83s, after you subtract that, not quite. Neither one of these is giving me 1%. So if I go to next week, same thing. Next week, the 84s, $1.14. Well, I'm getting more than 1% if I do next week's, but next week's is 9 days. Okay, I can still get 1% off of something else. All right, last 30 days. Okay, definitely no. Look where it is. definitely want to wait for that thing to come back down again. Okay, now don't get me wrong. I like Nike. I don't even know if I own a Nike. Hold 1 second, let me check. I don't think I own any Nike. Nope. Nope. No Nike. Huh, is what it is. Now, I did have Nike a couple of weeks ago. Must have hit that target. Because see, look where your 30-day bottom was, right here. Now, I like 2 days to the upside. So here's your 30-day bottom. 1, 2, I probably would have jumped in here or here. Okay, now I don't remember because I don't like to have to remember what I did weeks ago. Okay? In fact, if I want to do that, I have it right here. All my trades this year are all logged in right here. Okay? Week 21, here we go. Intel, Wynn, Marathon, and Macy's. Week 22, AEO, Bitto, MPW, Marathon, Kohl's, Gap, Wynn, Paramount, and Lowe's. Oh, that's a nice round thing. But all my trades are logged in right here. Here's week 25, week 26, 27, 28, 29, blah, 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 so on and so forth. If you didn't know, we are currently, as we are at this moment in time, in week number 8 for the third quarter. Okay? 4 quarters, January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. Every quarter looks the exact same. What do I mean by that? Well, let's go back to here. Get rid of this. Let's go back all the way to January. Okay, here we go. January. You ready? First week of the year. Second week, third week, fourth week, fifth week. Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan, MasterCard, General Mills, AT&T, Verizon, Abbott Labs, AbbVie, Hormel, PNC, so on and so forth. That's the first week, the second week of January. Okay, the first week and second week of the first quarter. Well, let's go to the second quarter. Okay, second quarter. You ready? Oh, look at this. Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan, MasterCard, General Mills, AT&T, Verizon, General Dynamics, AbbVie, Abbott Labs, General Electric, Hormel, and PNC. Basically the exact same. First week, first quarter, first week, second quarter, basically the exact thing, exact same. Third quarter, July. Okay, Cardinal Health, Comcast, American Express, Bristol Myers Squibb, Cisco, General Dynamics, JP Morgan, Lennar. Ooh, Lennar jumped in there. MasterCard, General Mills, AT&T, Verizon, General Electric. Same thing. Quarter after quarter. There's 13 weeks in a quarter. 1, 2, 3, 4, 5, 6. And then after 13, it starts back over again. Okay? So, I'm going to be looking at Comcast the first week of every quarter. First week in January. First week in July. First week in April. First week in July. First week in October. So on and so forth. And then back to January again. It's the same thing over and over and over again. Fidelity is a good one. I'm going to say no to Fidelity. It's a little complicated. Thanks. I was looking at Thinkorswim and Webull. Okay, so I've never really looked at Webull. I use Robinhood because it's so simple and it's right there at my fingertips. Let's keep on going. Keep on going. 65 more questions. I've tried Webull. I like it, but some people think it's a scam. But I never had an issue with them. Okay. Stav Graziani. Ooh. What do you think about Amazon? Well, Amazon would be really awesome if they shared some of their freaking profits. I mean, the guy has enough money, he can share the profits from the company. Oh, wait a minute. The company's not profitable. No. Amazon's a no. Sorry. For me, anyway. Does anyone know what program he uses? It's not a program that is called Thinkorswim. Okay? This is called Thinkorswim. It's not a program. You can go to thinkorswim.com and download it to your computer for free. Now, it is owned by Charles Schwab. Charles Schwab, from what I understand, will allow you to use it for a while for free, but eventually they would like you to step up and open an account at Charles Schwab. Now, I've been using Thinkorswim for over 20 years. I loved it back 20 years ago, and it's still just as awesome. I remember when they came out with the seasonality charts. That was cool. What is it? Da, 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 da. Hey, Rocky the Realtor. Haven't seen you in a while. Yeah, Rocky, I've been here every single night, dude. You haven't. All right. Is that QJ1 Inc.? How can I get the dividend calendar? All right, well, this particular dividend calendar just so happens to come with the trading platform. Now, wherever you buy your stocks has a trading platform, and they have charts, they have ways of checking data, they have option chains if you're qualified for it. Now, you do have to apply to be able to trade options. Okay, a covered call is one of the safest strategies there is. It's one of the easiest ones to get approved for. What stock was that? That was Nike. High is 70. Okay. We got a new CEO. Yep. Wade. Everyone kept telling me that. Why does everyone keep telling me that? I have no idea. 86. Thank you. Thank you. 86. Hey, James and all. 86. Thanks for showing up. I always say thank you to you guys for the moderators. Now, we have a couple of moderators here. What they do is they get the trolls out, okay? And every once in a while, I thank them. 86 is one of them. Thank you very much. Hollywood, he should be one because he's here all the time. He knows what's going on, but he isn't asked. So, is what it is. Oh, wow, I missed all these questions. Yeah. I am not asking him to explain anything about it. It never fails me, this baby. Uh-oh. Ernst Mitho Trades. Ernst Mitho Trades. What is he asking for? Ernst Mitho Trades. PLTR is my baby. Oh my goodness. Okay. You know, some people like PLTR. I particularly don't. And the reason why I don't like PLTR, there are no dividends in the selected time frame. Okay, so I'm a little concerned. All right, correct me if I'm wrong. But the title of the show is Dividend Investing for Cash Flow, for weekly cash flow. So why would you come here knowing full well that PLTR doesn't have dividends, yet you ask me to take a look at it anyway? Okay, Bitcoin, I don't do Bitcoin, sorry. And you know, there's absolutely nothing wrong with PLTR. If you like it, if it works for you, great, more power to you. But there's an old saying, like, I like old sayings, okay? I grew up in the 60s and 70s, you know, we have this saying, it ain't broke, don't fix it. We also have the interesting saying that says, my show, my rules. I don't like stocks that don't pay dividends, plain and simple. I don't like stocks that don't have weekly options, plain and simple, okay? At some point in time, you're going to get to a point in your life where you say, all right, trading my time for money, I am done with that. I need to find a better way to spend whatever time I have left. I'm 60 years old. What do I got? 30, 40 years left to go if I'm lucky? Okay? More than half of my life is done and over with. I miss the opportunities to buy something low and wait for it to grow. Can't do that anymore. So now I have to look for cash flow. PLTR doesn't give me consistent cash flow. There's no way for me to judge where it comes from and where it's going. So PLTR to me is a no. Thank you very much. Orange, blah, blah, no dividends, won't like it. Thank you. Homie, yo, from Canada, what's happening? CSTM, pickled peanuts. What the heck is CSTM? Let's take a gander at it. CSTM. Interesting. Okay, it does have weekly options. 16s. The 16s are going for... Wait a second. Yeah, we can't read this one. The reason why we can't read this one, take a look at the numbers. Last traded price, 16.10. The bid, 15.26. That's kind of far away. And the ask, 19.74. The numbers aren't realistic. I can't get a good read on them. So you have to wait till the morning to find out what it looks like. But I never heard of CSTM. So let's go to Yahoo Finance and see how CSTM, how consistent they are with their dividends. Oh, why would you do that to us? We just wasted time looking at something that says there are no dividends to select a time frame. Sorry, CSTM is going to be a no. Yep, I'm not asking to explain anything about it. It never fails me, this babe. Good for you. Andrea, can we look at Altria, M-O, at last? I'm not sure if they are monthly, but they are dividing. Okay, Altria. M-O. No. Sorry. Andrea, that was quick, wasn't it? Look at where it is. It's at the high of the year. Okay? 51.31. The 51s are going for 46 cents. Not quite 1%. That's a no also. Okay, now don't get me wrong. I like Altria. Altria is a dividend king. They've been around for over 100 years. They've consistently increased their dividends for more than 5 decades. So it is on my list, but it doesn't work for this week. Okay? What was that, a month ago? We're at 46. Now we're at 51. That's a $5 increase. That's a 10% increase. Okay, fine. I want to put my money into stocks and I have no knowledge of how it works. Big Kahuna. Well, now Big Kahuna, I'm going to disagree with you there for a little bit because we all know more than we think we know. Okay? What do I mean? Hold on a second. Let's go back here. Let's go here and do this right there. Now we're going to jump over to here. Now, Big Kahuna, you ready for this? Now, I'm going to rattle off a couple of these companies and you let me know if you have not heard of any of these. American Express, Bristol Myers Squibb, Globe Life, Procter & Gamble, DHI. I'm with you on this one. I don't know who DHI is either. Aon Bank, Ally Bank, Verizon, MasterCard, AbbVie, Bank Mellon. Okay, let's go. T-Mobile, Heinz Ketchup, Bank of America, General Motors, Coca-Cola, Bird Gaming, Boyd Gaming, Hewlett-Packard, Occidental Petroleum, Paramount, Mendeley's, USB. You probably heard of each and every one of those banks. Each and every one of those stocks. There's more, okay? I can go back and take a look at even some more. Siri, Wells Fargo, Apple, Capital One Finance, UPS, Jefferies, Visa, Moody's, Heinlein & Payne, Chevron, Kroger, Louisiana Pacific, Johnson & Johnson. Now, all these companies here are on Warren Buffett's stock list. Now, you probably heard of almost all of them. Okay, here's some more. Kinder Morgan, Intel, Ford, Target, ExxonMobil, Archer Daniels, Pfizer, Siri, Walmart, Wells Fargo, IBM. These companies we grew up with. We know who they are. We know what they do. You should, hypothetically, have some kind of idea who they are. Home Depot, Lowe's, Procter & Gamble, Clorox. Anyway, you know who they are. Okay, you also know at some point in life, you're going to take whatever money you earn and you're going to take a little bit of it and put it aside for your retirement. Because whether you want to agree with me or not, retirement is coming. And when you retire, when you stop working, Money has to come from somewhere in order to pay your bills or pay my bills. Okay? Because as humans, we're the only species on the planet that have to pay to live here. Pay to have electricity, pay to have water, pay to have a roof over my head, pay to have a TV, pay for internet service. So we have to pay. So the money's got to come from somewhere. So you take your little bit of money and you figure out what to do with it. You put it into something that you know. Okay, if you're a gardener, well, good, you do gardening stuff. Okay, if you're in real estate, well, you do real estate stuff. If you do, collectible cars, you're a car guy, well, you do car guy stuff. Here, it is simpler and easier. The reason why I say it's simpler and easier, no overhead, no office, no employees, no inventory. There's a couple more notes in there. No brick and mortar store. As long as you have an internet connection, you can take a look at companies like 3M, Key, Corning, eBay, Baxter, Hershey's, Whirlpool, Visa, Starbucks, British Petroleum, Aflac, companies you've heard of. And then you go from there. That's the simple part. What do I like? All right, well, you go from there, you go to here. Okay, let's go and do this. Okay, very simple. This is what you call a chart. Okay, this is the furthest away. This was a year ago. This is today. Okay, left to right. Each one of these little lines represents a trading day. There's 265, 66 trading days in a year. There are 4 quarters, and each quarter has 90 days, 66 trading days, 13 weeks. So if it was here a year ago, it went up, it went down. It went up, it went down. It went up, it went down. Up, down, up, down, up, down. Where is it now? Well, right now it's at the absolute high of the year. My personal suggestion, don't buy it at the high of the year. That's when you're supposed to be selling. Okay, there's certain times to buy and certain times to sell. You're going to make the most money in the stock market by buying low and selling high. Take a look at this time frame right here. Okay, the stock went up, it came down. It went up, it came down. Well, where do you think it's going to go next? Well, up, down, up, down. Sounds like a teeter-totter. Remember teeter-totters or seesaws growing up? One person's at one end, one person's at the other end. Someone's always buying, someone's always selling. It's always going up, it's always going down. Up, down, see? Up, down, up, down. If you even zoom out a little bit further, okay? Up, down, up, down, up, down, up, down, up, down, up, down, up, down. That's all they do. Okay, the idea with the stock market is pick a good company. One you understand. One you have no problem buying and holding on to for a long time. Is that what we want to do? No, it's not what we want to do. We want to buy it. We want to make a profit off of it. We want to say, okay, great, thank you. We'll see you again in 90 days. Why 90 days? Because every 90 days they pay a dividend. Now, a dividend is a portion of the profit that goes directly to the shareholders. And who are the shareholders? Well, that's you and me. We buy and we sell stocks. We are shareholders. Okay? If I want to buy 3M, okay, it has its dividend date right here. What the hell's that thing about? Huh. A little bit of a glitch. All right. So each one of these little green dots represents an EX date, or the date in which the stock trades before the dividend is paid out. So if I want to collect the dividend, or the shareholders' portion of the profits for 3M, I have to buy it before this date. The 22nd, the 21st, the 15th, the 7th, the 6th, the 2nd, whatever. As long as it is before the green little dot for 3M, then I get to collect the dividend. But here's the thing. Stocks have a tendency to increase in value before this date. So if I buy it here, well, by the time it gets here, hypothetically, it should be higher. Okay, if I buy it here, hypothetically, it should be higher here. All right, by that we figure out, we always look at the charts. Right, the chart tells us where the price is at the moment. Okay, it goes up, it goes down. That's all it does. So Hakuna, big Kahuna. You may think you don't know a lot, but you do. Okay, you go into a store, any store. What are they going to tell you? Okay, you're going to tell you, all right, this is what it costs. Okay, now the owner of the store, this is what he pays. The owner of the store, this is what he sells it for. Okay, if we are buyers, we come and we pay this price. If we are vendors or we are sellers, okay, if I am an egg farmer and I come to the grocery store and say, hey, I'm an egg farmer, I'm here to sell you some eggs. This is the price I'm going to get. Okay, if I want to buy the eggs, I'm a buyer, a consumer, say I want to buy some eggs. Well, this is what I'm going to pay. Bid, ask, what I sell for, what I buy for. All right, it's the same thing with everything. All right, so let's go and continue. But Big Kahuna, if you really want to chat with me, send me your number. I'll give you a buzz. Chris, PFL. Explain to me what the heck PFL is. PFL. Primco. Income strategy. No options, that means it's a no. New to all this, what is your best advice? Javier, my best advice, keep coming back. Keep learning. Keep educating yourself. The stock market's not going anywhere. It's been around for over 400 years. The first dividend stock was traded in 1602. Okay? Not going anywhere. Options have been trading since the 1970s, so they aren't going anywhere either. Hi, do you generally trade shorter time or only long term? Ooh, you're definitely new here. Dude, the longest I've ever held anything. Now, I've been trading for over 20 years. The longest I've ever held anything was 9 months, and that was Kimberly-Clark last year. So Kimberly-Clark, PPG, and Target, they all, I can't think of a good way of putting it, but let's just say they challenged my resolve last year, okay? I held on to Kimberly-Clark for 9 months, Target 6 months, PPG 6 months. The longest I've held anything this year was AEO, and I've held it for 4 months. Okay, I don't want to hold anything. I want to buy something, I want to make a profit off of it. That's it. I want to buy something, I want to make a profit. Because it ain't a profit until you take it, and nobody ever went broke taking profits. Okay, Ernst, he collects dividends and do covered calls to collect weekly premiums which are above 1%. That sounds like what I do. Well, good for you. We're both on the same page. Request dividend stocks and weekly options only. Yep, like it. SC, oh my goodness. All right, I'm going to take a quick little roll call. Should we pick on the prince? He wants to take a look at SCHD. That was one of the biggest turds I've ever seen. One of them, there's a bunch of them, and SCHD is one. Let me explain. And this is just my opinion, because Mr. Prince, it might work good for you. For me, not at all. SCHD. Number one, it is a monthly optionable stock, which means it's not going to pay me as well as my other stocks, no matter how you slice. Remember the commercial? Snickers, no matter how you slice it, it still comes up peanuts. So no matter how you slice a monthly, especially SCHD, it's not going to give me what I'm looking for. I'm looking for a safe, predictable, consistent 1% per week. You cannot do that with a monthly optionable stock. Monthly means once per month. There's only 12 months in a year, means I can only do it 12 times. And if I'm getting an average of 1 to 2% per option, well, that's only 12 to 24% per year. And that may work for you. It doesn't work for me. I like weekly options. Weekly options, 1 to 2% per week, is over 50% per year. Now, I'm not a genius. I didn't go to school. I don't have any degrees whatsoever. But I do know that 52 is higher than 24. Okay? But wait, it gets worse. Let's see how really bad SCHD is. For that, we go into our SCHD. We go into Yahoo Finance. Now, Yahoo Finance is my preferred one. You can use Google Finance. You can use NYCE, the New York Stock Exchange. You can use their information. You can use any financial information you want. I just so happen to like Yahoo Finance because I've been using it for so long. So, now, SCHD. Let's take a look at their dividends and how consistently they increase their dividends. Okay, first of all, wait a second. 2011, that's only 13 years. Well, that doesn't fit my parameters. I like 20 years of increased dividends. Well, this doesn't work. It only has 11 years. Or wait a minute, 13 years, sorry. Now, let's take a look at the dividends and see how consistently they increase. 2011, 12 cents, 14 cents. Ooh, nice. 21. They didn't increase. Hold on. 26, cool. 20, wait a minute, they went backwards. 23, 25, 27, 28, 27, 31, 30, 27, going backwards. 30, 32, 24, backwards again. 40, 33, 34, 35, 26. That's an 11-cent decrease. That's almost 30% decrease. What the hell? All right. 41, 37, backwards again. 41, 35, backwards again. 42, 49, 47, 44, 54, 60, 50. That's a 10-cent drop. On a $60 stock, that's over 15%. 54, 59, 62, 70, 64, 70, 60, 74, 61, backwards again. Okay, so they have no consistency whatsoever on increasing their dividends. No, I don't like that. But wait, it gets worse. Let's go to summary. Okay, summary gives me an idea of how well this company works. Okay, can I be reading this properly? Now, I'm showing you simple, safe, predictable, consistent to get 1% per week. That's over 50% per year. But Prince here, okay, Prince here wants to invest his money and get 3.43%. 3.4. 3.4. I can buy government bonds and get 5%. Why the hell would I put my money give my money to a computer? ETF is an electronically traded fund, which means it is controlled by computers. And don't give me this is exchange traded fund crap. Exchange electronics, the same damn thing. Okay, you go there and you find out the exchange is all computerized. Well, an electronically traded fund. You're giving your money to a computer, and the computer is saying, all you deserve is 3.4%. Yeah, no thank you. I don't like CHD. It has crappy performance, not consistent with the dividends, and they're monthly. No, no, and no. So, let's continue. UNH holding good. What the heck is UNH? University of New Hampshire? I don't know. That's what it sounds like to me. Okay, UNH. Okay, 578. All right, now 578, I don't really like paying that much. UNH. Okay, UNH. Let's take out the historical data, see how often they increase their dividends. Okay, let's go all the way back to the max. Nice. Interesting. Okay. So, in 2001 they started paying dividends. Right? They pay once per year. So 2001 it was 1 cent, 2002 1 cent, 2003 1 cent. They didn't increase it at all. First 3 years they didn't increase. 2, 2, 3, 3, 3. So look at this. 1, 2, 3, 4, 5 years. They didn't increase the dividends at all for 5 years. 2010, Then they started going quarterly. 13, 16, 21, 28, 38, 50, 63. Okay, fine. So for the first 5 or 10 years, they didn't do squat. But the last 10, okay, fine. Well, that's UNH. What is the summary? I can't read it. Something's in my way. All right, so let's go here. UNH 578, out of my price range, something I would probably never do. And look where it is. Here's the high of the year, and here's where it is now. That's a little too close to the high of the year for me. But at 578, I would be looking at the 577.50s, which are barely paying 1%. If you like UNH, I've never heard of them. I probably wouldn't do them. They don't have 20 years of increased dividends. I have enough companies to look at that do fit my parameters. My parameters are 2 decades, 20 years of increased dividends. That means every single year, higher and higher and higher and higher dividends every year. That means they're profitable. It's the shortcut, okay? If you ask, well, how good is the company? Well, now I'm going to have to look at the annual reports, the quarterly reports. Jody, regarding the calendar, do you enter the stocks by dividend dates, or does the program populate the information for you? Absolutely it does. Okay, you can go to Google, Bing, or whatever search engine you want to use, put in EX dividend calendar date, and a whole bunch of them will show up. You pick which one you like the best. I like the one that's actually inside the trading platform of Think or Swim. Okay? Now, what I tell people is, if you want to download Think or Swim and use it on your own and you need help, just give me a call or put your number in the DM. I will give you a call and I'll walk you through it. Okay? Believe it or not, I'm actually here to help. I love helping people. I love talking to people. I think I talked to 2 people today. Okay? When I asked people, send me their phone number, well, 3 people sent me their phone number yesterday, and one person said, here's my phone number, but don't call me until Tuesday. I said, oh, it really doesn't work that way, but okay. You know, I usually just pick up the phone and call. Let's keep on going. 55 more questions. All right. Andrea, we're so behind on the messages, I can't remember what I said traded. I think it was sound. Oh, yeah. You did mention sound a while ago, Andrea, and I did say sound does not fit the parameters. Okay? I like consistent increases in dividends, and I like weekly options. Cool. You like that, Judy? Way to go. Judy's paying attention. Did you cover Dell already? Drozik, I'm going to take a look at Dell in a little bit. Bought Walgreens today. Barry, way to go. Did I buy Walgreens today? Holy shit. I got to keep doing this. Walgreens. I have Walgreens. And I didn't sell my options on Walgreens. Oh, that must have got canceled. Got Walgreens there. And I got Walgreens in all, well, the 3 accounts that I share with you guys. So let's go and take a look at Walgreens. WBA, we take a Walgreens, and then we'll take a look at Dell. All right? Walgreens. Walgreens. Always one of my favorite. WBA, high of the year, low of the year. Look, it's bouncing off that low. It's where it was. This is where it is. It's where we're going. And right now, it's at $10.88. The closest one's going to be the 11. And the 11's only going for 6 cents. You know what that means? That means Walgreens is a no for this week. Now, I already own it in all 3 accounts, which means I'm not getting 1% in my Walgreens this week. Can't get them all the time. Now, I average over 1% every single week. Now, for those of you who may doubt that a little bit, let's take a gander. Let's take a gander at all my trades so far for this year. Now, go over to the 10-minute trader. I'll say take a look at all the trades. Here we go. Week number 1, 2.12. Right there, see it? Right there, 2.12%. Week 2, 1.3. Week 3, 0.85. See, I don't make 1% every week. Okay, week 4, 0.9. 1.03, 1.06, 1.9, 2.03, 2.32, blah, blah, blah. They're all there. You want to check them. They're there. Look at this one right here. Week number 18, 2.61. You know, the numbers are all there. Next. Uh-oh. I did the wrong thing. I hit the wrong button. I hate when I hit the wrong button. All right, so let's go back to where we were. So it's going to be a no for me this week for Walgreens. Even though I already own Walgreens, I think I own it in 4 or 5 different accounts because I like it. Take a look. Okay, the high's over there, okay, over 28, and the bottom is here. And this is the bottom of a 7-year period. Okay, now Walgreens has a lot of crap going on in the news because of the theft. Now, we all know what the theft is. We all know that the current administration doesn't want to prosecute for theft under $900. Well, Walgreens doesn't have anything over $900 there. Everything is like below 900 bucks. People walk in, stuff their pockets, stuff their what do you call it, their travel bags, and they walk out the store and don't pay for anything. Okay, Walgreens is not the only store having this issue. Macy's is having the issue also. See, some of the CVS stores are having the issues. Okay, the current administration doesn't want to prosecute theft, letting people get away with it. Okay, gonna wreak havoc. All right, so anyway, it is the low of the, I think it's 7-year period. I think, so you can correct me if I'm wrong. I don't claim to be right at everything. Okay, so she drops here, and she starts to turn around going to the upside. Well, great. I like 3 days to the upside before I jump in. Well, here's your bottom right there. On the 12th, higher, 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 higher. This is your 30-day bottom. It's also the bottom for the 1-year period. It's also the bottom for the 5-year period. You make your money in the stock market by buying low and selling high. Okay? Walgreens ain't going anywhere. Okay? They may be in trouble. If you remember the beginning of the year or last year, it was Target. Everyone was picking on Target. But Target's been around for over 100 years. Walgreens has been around for over 100 years. Walgreens is in every major city in the United States. There's 8,700 stores worldwide. Do you really think they're going to disappear overnight? No. All right, let's keep on progressing. Dell. I told Dryzer we're going to take a look at Dell. Dell. Here we go. Ooh, look at that. Doesn't that look pretty? Okay. Dell, D-E-L-L. Here's the high. Here's the low. That's where it was. This is where it is. And look at this direction right there. This thing was at 50 bucks a year ago. The high of the year, 180. That is a nice run up. That's over 100%. Way over 100%. Like 200, 300%. Anyway, last 30 days, right there. Take a look at that. 30 days goes to 30-day high. Right here is our 30-day bottom. Look at this run up here. That looks sweet as hell. But also, look at this. See how it's slowing down? Okay, it might be slowing down. I don't know. Let's take a look. 111.75. The 112s are going for 230. That's over 2%. I like Dell. And if Dell's giving me 2%, hell yeah, why not? I grew up with Dell. Okay? That's the chart, the last 30 days anyway. What does it normally do this time of year? Sideways. Not a whole heck of a lot. Okay, but you got to ask yourself. There's a couple of questions you have to ask yourself before you do anything. Okay, number one is, does this make sense? That's a biggie. Does it make sense? Do I like Dell at this current price? If I buy it, what is it going to do? Do you ever sit out a week on something you're holding if the numbers don't work? Nope, I go 2 weeks out. So, on that question, Dennis, okay, right now it's at 11.75. Let's say I didn't like this week, the 11.75, 111.75, the 112s going for 230. If I don't like that one, well, let's change it up a little bit. Let's get this. Okay. Let's go out 2 weeks. Okay. 2 weeks, the 112 is paying $7.30. Cool. Well, if I want to go out a little further. Okay. The 112, $7.70. Well, I prefer this one here because it has a better number. Because look, the 112, 230. Okay. But look at this. One more week, I'm getting $7.30. That's a hell of a lot better. One more week, I'm getting $7.70. Nah, not quite the same. I like this one right there, personally. But always look at what your numbers are, because the numbers won't lie. The numbers will tell you what is the best option for me to jump into at this moment in time. And does it make sense? Do I agree with it? And am I okay with owning Dell at this current time? You know, especially what the chart tells me. Okay, the chart's telling me what the chart is telling me. Okay, a year ago we were at 50 bucks. Back in June we were at 180. Now from 180 she drops all the way down to 90. Lost 50% of its value. See, look over here. From 50 to 180, 50 to 100 is 100%, 150 is 200%, 180 is like 230, 240%. It's a 240% increase to here. Now from here to here, it's a 50% drop. Well, now we're at 90. Well, now we're at 110. So do I like Dell at this point? Do I want to own Dell at this point? Am I okay with buying it at this price, selling this right here, collecting this premium right there, and just waiting it out and just collecting that premium? The premium is nice. I mean, think about it. You're buying it at 11.75, 111.75. You're selling it at 112. You're collecting $7.30. What is $7.30? Hold on a second. Let's bring this over here. Clear that. $7.30. Now the purchase price is $111.75. That comes to a grand total of 6.5% for 2 weeks. This week and next week. That's over 3% a week. Hell yeah, I like that one. All right, Dell, for tomorrow. I'm going to see if I actually have any money left over. I doubt it. Hold on, let's just check that real quick. Hold on a second. Nothing there. Nothing there. Nothing there. So these 3 particular accounts all tapped out for the week, which means all my investing is done for the week. So what do I do Tuesday, Wednesday, Thursday? Well, Tuesday, Wednesday, and Thursday, I go in and I take a look at this right here. Right? Well, what happened today? Well, today, this is what it did. Cool. How does that affect my current position? What am I going to do on Friday? Well, tomorrow doesn't really mean a whole heck of a lot of anything because I've already into my positions. But tomorrow will give me an idea of what the stock is going to do. And then Wednesday and then Thursday, same thing. I just go in and I monitor what my account is doing. If it makes sense, great. If it doesn't, well, what can I do to adjust it? All right, and then on Friday at 3 o'clock, all my positions, okay, all these right here, all these right here, and all these right here. That's when I balance them out. I'm thinking, okay, what am I going to do to make sure my money is safe and the returns are predictable? Now, I have no problem whatsoever holding on to some of these companies. Now, I've had Win for 4 months. Got no problem with Win for 4 months. Okay? It is 11:25. 5 minutes left. We got, holy shit, 91 questions. I'm not going to be able to get to all of them. Do you trade or just analyze? Well, Ben, yes, I do trade. You paper trading? No, Ben, I'm actually doing both. Okay, now I have 6 different accounts. This one here is a paper trading account. This one is not. This one is not. Okay, but I use this one for my training. Use this one for my training. The other 5 accounts are for trading. Difference between the 2. Okay. Why play Bitto? Bitto, we were playing that one for a calendar spread. Calendar spread is really cool if you understand it. I don't explain it here. That is specifically only for the morning trading group. That's all. Okay, Brad, I already answered that question. Can I show you the live account? I already did. That's all on the website, blah, blah, blah. Is it too late for AMAT? Kachi, we're going to write AMAT down for tomorrow. AMAT. We'll take a look at it tomorrow, all right, because we're at 11:30. Does anyone know my win rate? Oh, Ricky, awesome, great question. Account statement. Come on. Let's get rid of that. Profit and loss year-to-date summary. Okay, are you watching this, Ricky? Right there, okay? You see it? I'm not hiding anything. 1, 2, 3, 4, 5, 6 losses. But not really. Top one right here, Wynn Resort. I still own it, so it's not a loss. Number 2, AEO, that is a loss. I took a loss on it last week. Didn't plan on it, but I don't know if you guys were, remember a couple days ago, my computer crashed? Well, my computer crashed, it reset the time. So I thought I had 15 minutes left on Friday. Okay, at 3:45, I'm looking, okay, what am I going to do? What am I going to do? What am I going to do? And then all of a sudden the bell rings. I said, what the hell? Yeah, so I lost money on that due to a technical error. All right, so one loss AEO. Kohl's showing his loss. I still own it. It's not a loss. So AEO, Bitto, Albemarle, and nope, that's it. Just 3. AEO, Albemarle, and Bitto. Those are the only 3 in this particular account. Okay, now you want to see real account, blah, 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 whatever. Account statement, there we go. Okay, profit and loss year to date. Okay. The only couple losses here is this one. Okay, but that one is what? Schwab variable shade plate, yeah, whatever. That had nothing to do with me. I still own all these, so there's no losses in this one, except for that one. And the last one. Okay, only one loss on this one, and that was NYCB. Okay, lost 1,500. I don't still own this one, still own this one. So yeah, my win rate is pretty damn good. I like to think. All right, so let's keep on rolling. PLTR, we already talked about PLTR, and that's a no. I missed all these freaking questions. Sorry, guys. Good evening. Do you trade with Thinkorswim, Robinhood, or mixed platforms? I have 6 different trading accounts. 6. I share 3 of them here. Okay, the rest of them I do not share. Okay. So I use Thinkorswim and Robinhood. Oh, that's awesome, James. You're a good person. Thank you. I have no idea what we're talking about, but all right. Free to think, to live. Okay. What do you think of Intel and its recent fire sale pricing? Ooh. Let's write Intel down for tomorrow. INTC. Or look at Intel tomorrow. VXX, baby. Never heard of it. You know what that means? VXX. If I've never heard of it, and I don't want to stop. You know what? I'm not even going to bother. You ready? Let's just take a look. Okay. VXX. Okay. Interesting. 44. VXX. Historical prices. Okay. Dividends only. Oh, imagine that. I was going to say no, but it's no. Sorry, no dividends means it's a no. So VXX, never heard of it, usually means it's a no. Okay, makes sense. Holding if the numbers don't work. For your information, Edgar Bromfield just made $4.3 billion offer for Paramount to outbid Skydance Media. Okay, Secretariat, thank you for that. Do I have Paramount? No, I think I have Marathon. Paramount. Nope, I don't have Paramount. I have Marathon. Yep, Marathon, not Paramount. So I don't have any Paramount this year. I mean this week. So that has nothing to do with me. But thank you for that. We'll take a look at Paramount. Blank. Buy low, sell high. Is that correct? Of course. ET Energy Transfer. We already did that. We already did UPS. What do I think of ICT? I never heard of ICT. ICT. Yeah, no options, no. JEPI, Mateo, seriously, you don't want me started on that thing. That's a no. Good evening. Do you trade with Thinkorswim, Robert? Okay, we're do a mix. That's awesome, James. You're a good person. Thank you. What do I think of Intel? Love Intel. We'll take a look at Intel tomorrow. Let's go 200,000 in AVGO. Thoughts? AVGO. AVGO. Isn't that one interesting? AVGO, cool beans. Well, good for you. Take a look where AVGO is. 167. That's a nice run up from 130 to 167. So here's a question for you. Where do you plan on getting out? Unless you plan on holding it. Because if you plan on holding it, get ready for a downturn. Because she goes up, she goes down, she goes up, she goes down. Where's she going next? We'll take a look. Here's your bottom. 130 to 167. That's a $37 increase. If you think there's not going to be profit taking coming soon, you're sadly mistaken. I save money myself for something like this. Alrighty, Dennis. Do you ever sit? No, I don't. All right, let's keep on going. All right, got that one. Got that one. Buy low, sell high. ET, we already looked at that one. Got that one. Ricky, WFC. Ooh, I like Wells Fargo. Have you done Broadcom yet or AVGO? No, I'm just answering the questions we're getting done for the night because it's past 11:30. I turn into a pumpkin. I like gambling with same-day options. More cool beans. Good for you. Oh, Bama Redneck, 265. Cool beans. Yeah, and we tipped over 300 for a little bit. Do you ever plan to buy Berkshire in your life? Never. Dividend King stock bounce just as much as other stocks. Make profit every cycle. Charlo, I'm going to agree with you. No escape. Cool beans. Thanks for all you do. You're welcome, Ghost Man. Blah, blah, blah. Is recession coming? No, it's not. Is it better to sell covered calls on stock I've owned for a while or stuff I just bought? Is that Luis? Oh, Larissa. Oh, Larissa made this. How are you, Miss Larissa? You're new here. Never seen you, never heard of you. But that's fine. Perfectly okay. Larissa, if you really want my opinion, send me your number. I'll give you a call. We'll sit and we'll chat. Okay? Either that, when you buy something, well, eventually you're going to sell it. All right? What do stocks do? We can take a look at every single stock, and you're going to see the exact same thing. Okay? It goes up, it goes down. Up, down, up, down, up, down, up, down, up, down, up, down. That's all it does. Find a bunch of stocks that you like, buy them when they're low, sell them when they're high. How do you know? Well, you just take a look at the 30-day charts or the 1-year charts. I take a look at the 1-year chart first, the 30-day, I take 1-year chart, 90-day chart, 30-day chart, and then the seasonality. It sounds complicated, but it's really not. So let's take the AVGO for an example, because it's up here, all right? A year ago, we're here at 90 bucks. Okay, you can see the movement. Up, down, up, down, up, down, up, down, up, down, up, down. It's continuous, and here it's going sideways. I hate saying sideways because it goes up, it goes down. Up, down, up, down, up, down, up, down. Then it gaps up, comes down, up, down, up, down. Now she's going up. So where do you think it's going to go next? Well, more than likely it's going to come down. That's all they do. Okay, find out where your entry point is. Once it goes high enough to take a profit, we'll take the profit. And then wait for it to come back down again. Because that's what it does consistently. Take a look. Okay? Up, down, up, down, up, down, up, down, up, down. Then up. That's all it does. Pick a good stock. Okay? Buy, sell, buy, sell, buy, sell. It's consistently moving, consistently producing 1% every single week. Rob, check out VAXART, VAXRT. Rob, I could basically say no and no now, unless you want me to pull it up. VXRT. Hold on. Put this right there. VXRT. Yeah, no. See? Monthly. No, it doesn't work. The numbers never work for me with monthlies. Okay? Not only do the numbers not work, Trying to figure out where it's going to be from today, from 4 weeks from today, yeah, no thanks. I don't want to play that. I have 300 companies that I look at on a consistent basis. I definitely do not want 301, especially when 301 doesn't fit the parameters that the other ones do. And I'm going to assume VXART is going to be the exact same thing. That's going to be no. Hey, no escape, carve out, where I looked at that was already a no. Sahid? Uh-oh, I missed some questions. There it is, Sahid. What do you think of NYCB? You know, Sahid, at the beginning of the year, we were trading NYCB. I lost money on NYCB, but now it's at like 11 bucks. We were trading it when it was around 3 or 4 bucks. Okay, we saw it go from 3 or 4 bucks, and now it's at 11. We missed out on that opportunity. It is what it is. MED, Medtronics. I like Medtronics, but we don't have enough time to look at it today, so we'll write it down for tomorrow. MED. We'll take a look at Medtronics tomorrow if you want to jump back in tomorrow. Yeah, Bama Redneck, I like that. Does Walgreens really have a 9% dividend? Okay, blank. We looked at it. Those were the numbers. WBA 1088, the 11. No, it doesn't. I don't know where you got that idea from. Okay, here's Walgreens right here. Okay, right now it's at 1085. Currently at the 11, okay, which is the closest. Okay, so if I'm buying at 11.85, the closest strike price is going to be 11, and that's going for 6 cents. That's not even 1%. So I don't know where you got that interpretation on that one. Oh, Walgreens, yeah, no. Bro said ICT. Okay, ICT. Bank of America Corporation 0 Series X. Yeah, it has no options, dude. That's a no. GOF. That's a no also. GOF. You believe in algorithms? Sure, why not? Bama Redneck, blank, 0.25 times 4 equals 1. And shares are 1085. So yeah, I'm not quite sure what he's talking about, but okay. Are you talking about Amazon? No Amazon. Rob, VaxArt just received $453 million from the U.S. government. Don't give a rat's ass. Did you like that one? I honestly don't care how much money they got from the government. Number one, they're a monthly. Number two, it's a no. Okay, I don't care how much money they got from the government. A lot of people get money from the government. Anyone gets the money from the government, I definitely don't trust. Okay, the worst money you can possibly get is free money. Yeah, no. Love your attitude. Life is good. Charlie, life is wonderful. Okay, life is exciting for exciting people. Life is boring for boring people. Life is stimulating for stimulating people. Best dividend stocks for beginners. Do I like SCHD? Oh, I hate SCHD. It's great for people who don't want to do, I'm not even going to say it's great for people who don't want, VOO is better, okay? Okay, if you're going to put your money into an ETF controlled by a computer, all right? Okay, I've seen enough Terminator movies. Sorry, I don't trust computers. Sorry, that's why I write shit down. Okay, I write shit down in the book. Look at all this. Look at all the stocks you guys have me look at. Okay, every single week I look at these stocks. Okay, hundreds and hundreds of pages every single week. And you know, there are certain ones that are good and certain ones that are bad. SCHD pays 3.4%, something like that. Crap, in my humble opinion. Okay, VOO pays 12%, a little bit better, but you're still giving your money to a computer, having a computer do your trading for you. Okay, nah, I don't trust them as far as I can throw them. Fascinating football videos. Dude, I haven't seen you in a while, and it's 11:40. You know I get out of here at 11:30, and you show up at 11:40. Whole world is screaming recession, and you say no. Not even a correction. All right, user 8500. 8500. Here's an interesting thing about the word that you want to use. As soon as you say that word, other people are going to repeat it. And if enough people repeat it, well, guess what happens? It's a self-fulfilling prophecy. If you say everything is great, well, everything's going to be great. If you say there's going to be a recession and there's going to be a pullback, well, then that's what it's going to be. Okay? So, plain and simple. Now, there's a couple of hundred people here. If you say there's going to be a recession, you now have 200 people saying, oh, wait a minute, I got to stop spending money. I got to stop investing. So what happens? They stop investing. And then all the people they know stop doing it. And then all the people they know stop doing it. Then all of a sudden, boop, here we are. Yeah, I don't like it. Whether it's coming or not, I'm not going to admit it. I'm going to live in a delusion thinking, hey, it's great. Because here's the thing. You gotta keep this in mind and don't ever forget it. Okay, the stock market's been around for over 400 years, okay? Okay, hold on a second. Let me get this thought. Now, there are literally hundreds of companies. Bank of America, Wells Fargo, Procter & Gamble, Lowe's, Home Depot, Clorox, Capital One Finance, Consolidated Edison, General Electric, AT&T, all over 100 years old. So let's take a quick look at the last 100 years. What has America given the world over the last 100 years? World War I, World War II, Vietnam, Afghanistan, Iraq, the Gulf Wars, the Great Depression, the stock market crash, the oil embargoes, the financial crisis, the Y2K crap, the dot-com bust, the pandemic. I can go on and on and on, okay? How many times has the world had a recession? How many times have we had a correction? Well, we have a correction every decade. Look, 100 years ago to where we are now. Every decade we have a recession, a pullback, a correction, whatever you want to call it. Fine, great, dandy, but you want to know what doesn't change? Coca-Cola has been making Coca-Cola over the last 120 years, or 140 years. Ford has been making cars for over 100 years. General Motors making cars for over years. Bank of America has been banking for over 100 years. Pepsi has been making soda for over 100 years. 3M has been doing whatever they've been doing for over 100 years. These companies have been around for 100 years or more and consistently increased their dividends. Recession or not, Coca-Cola is not going anywhere. Okay? Procter & Gamble, we're going to need paper towels, toothbrushes, toothpaste. General Mills, we're going to need cereal. Okay? No matter what happens, recession or no recession. I remember in 2008, I live in Sarasota area, okay? We don't have recessions here. Almost everybody here lives on a budget because they're all retired. If there's a recession, I'm not going to see it. Because I remember in 2008, I would go to the store and the parking lots were jam-packed. You go to a Cracker Barrel. There's lines waiting for people to get on. In an economic crisis, okay? A lot of the stocks came down to almost, well, 50 to 70% of their value in 2008. But yet, all the stores around here are full. I don't see it because I live in a retirement community. We call it God's waiting room. Terrible thing to say, but it is what it is. But back to that word. You say that word, you got 200 people, they're going to repeat it. Those people repeat it, good. Their families and their friends are going to repeat it. Then all of a sudden, everybody's talking about it. And then all of a sudden, here it comes. It's a self-fulfilling prophecy. I don't like the word. I don't like it looking at it that way. And if I continue to look at companies that are over 100 years old that have seen the Great Depression, have seen the stock market crash, have seen World War I, World War II, all that crap, yet they're still in business and yet they're still profitable. Okay? If you're worried about it, then don't do it. Simple. Buy low, sell high. It's that simple. Blank, you're absolutely correct. Uh-oh. What do you think of Max? Uh-oh, I missed some questions. Okay, actually, blah, 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 blah. She asked if it paid dividends, not premiums on Walgreens. Oh, yeah, Walgreens, I think the dividend is 2% this week, isn't it? CPI, Consumer Pricing Index. Well, the CPI, the Consumer Pricing Index, got absolutely nothing to do with Ford, General Motors, Chrysler, U.S. Air, all these companies, okay? It affects some stuff, great, but overall, no, it doesn't, okay? The CEO of General Electric says, well, Sally, I know you answer the phones, why don't you just Stay home for today and wait to see after the consumer price index comes out to see whether or not you should come into work. It doesn't work that way. People go to work, they put their 40 hours in the week. People really don't care. When I worked for a corporation, not once ever did my manager say, oh, you need to take time off, our stock price went down. Never happened. People go to work, that's what we do. Is semis going down? I have no idea what semis is. Jalo, thanks. Stock earn what? I have no idea what that means, Bill. She asked if Walgreens are dividends, not premiums. Okay. NAS 100, don't know what that means. Sahid, what do you think about SPWRQ? Okay, I can't give you advice on what to buy. I've never heard of that company. Now, Sahid, you've been here for a couple of times because I remember some of the questions you've been asking me. Now, I only invest in companies that are consistently profitable 2 decades or more. Okay, I've never heard of this company. So I can't tell you yes or no. All I can tell is that I wouldn't do it. Charlie, you like that? Write shit down. Your question. You know, hey, Charlie, you want to hear something funny? You're going to get to a certain point in life where you have to forget stuff, so you have to write it down. You know what's worse than that? Forgetting where you put the book in which you wrote stuff down in. That happens too. People make lots of money in recessions. You're absolutely correct, they do. We didn't start the fire. Didn't start the fire. All right, Bill, that's a no. Yep, okay. All right. Almost done. So no on earn. Bill, earn, E-A-R-N. I never even heard of it. E-A-R-N. E-A-R-N. A REIT. Well, for me, Bill, E-A-R-N is a no. Main reason, it's a monthly optionable stock. And I'm not quite sure if you understood what I said when I said monthly optionable stocks do not pay the same as weekly optionable stocks. Because a monthly option stock, you can only do it 12 times a year. Now, I'm not a rocket scientist. I didn't go to college. I don't know if it counts if you drive by a college or if you pull into the parking lot. I don't know. Does that count? You know, I went, wait a second. I actually got invited to speak at MIT. Has to do with dividend stocks and whatnot. But I actually went to MIT to visit. Okay? Yikes! Lose the book. Hell no. Yeah, lose the book. So sorry, Bill. Earn is going to be a no for me. If you like it, I don't tell people what to buy. Seriously, I don't. If you like it, you buy it. That's your responsibility. We're all adults here. As a matter of fact, as I remember reading some of the fine print on being able to, have an account on TikTok. Okay, I had to get parental consent, which didn't really need that because I'm old enough. But to be in this channel, you got to be at least 18. So if you're 18 or older, then you know that you are responsible for your own decisions. I do not make suggestions. I do not make recommendations. I read numbers. I read statistics. I can plainly see that this is a monthly optional stock. I have enough experience with monthly optional stocks. 695, well, it doesn't have a 695. All they have is a 750. The 750 is going for zero. Well, how the hell am I going to make money off of that? Okay, and worse than that, I've got to hold it for 32 days. 32 days is 5 weeks. Yeah, no thank you. The numbers just don't work with monthly optionable stocks. They just don't. Okay, you can only do it 12 times a year. And here, it doesn't even offer a $7. The $7.50 is going for zero. The $5 is going for $1.95. Well, the current stock is at $7. You take that $1.95 out of there, what are you making? 5? No, you make, that's negative. No, the numbers just don't work. And I don't know why I have to keep saying it every single night. Monthly options just don't work the same as weeklies. Okay, I'm here every single day. I see this twice a day. Broadcom. Ooh, Broadcom, interesting. The stock is called EARN, yeah, E-A-R-N. What is good to make money? You know what? That is such a broad question. You can go down the street, buy a stack of newspapers, stand on the corner and sell that and make money. Okay, you ask a better question, you get a better answer. Now, if you gave me a question like, I have $10,000 disposable income. How can I invest that safely? Get a return similar to 5 to 10% per month with a minimal risk and not much time or effort invested into it. That's a great question. A lot better than what is good to make money. Okay. What is a leverage? Okay, a leverage. I know what a lever is, but I don't know what a leverage is. I know what leverage is, but I don't know what a leverage is. Okay, the terminology is incorrect. Rob, you're gonna have to give me a better question than that because I'm a little bit vague on that one. Thoughts on Intel? Now we already looked at Intel earlier. MIT counts. Yeah, but see, I went to MIT because when I was doing this type of teaching. You need a t-shirt, monthly options don't work. Oh, Judy, I'm gonna have to get that one. Monthly options don't, that's a no. Monthly options don't work. I can get that one in the back. That's a no. Yep, Fish Slayer. Does stocks go down in price by the amount of the dividend paid? Not necessarily, so no name user 99, okay. From what I gather from the question. This is what I gather from the question. I could be wrong. Correct me if I'm wrong. Let's go to here. All right. Now, each one of these dates on the calendar represents the dividend date. Okay, if I click on any one, here's Archer Daniels. Okay, Archer Daniels is paying a 50-cent dividend. So before the date, the 15th, if I want to collect the dividend, I have to buy it the 14th, 13th, 6th, 30th, any day before the EX date. All right? Now, usually the stock goes up in value before this date. I like 2 weeks before. 2 weeks before, on a Monday, would be the 29th if I want to do Archer Daniels. Now, stock usually increases before the EX date, the dividend date. The stock usually decreases after the dividend date is paid. Okay, Judy, I want to take a look at some of these questions you've been asking. Yikes, lose the book. Yeah, I know, that's horrible. You like my philosophy? Thank you. Cool, Judy. Regarding the calendar, do you enter stocks? Okay, let's get into by itself. Duke Energy. We didn't do Duke Energy. Sorry about that, Neil. Let's do Duke Energy real quick because I told him I would. And I like to think that I'm a man of my word. Awesome. Thank you for doing those daily episodes. You're welcome. Bimmerodneck. Not this week. 1% on the premium. And it's only too pricey. Okay. Swing play Prazo. 40% gain. Okay. Just in time. You're definitely in the wrong place, dude. Okay. Deb. What's that? No. DCB. Devon Energy. DVN. We'll take a look at that one tomorrow. DVN. I'm going to take a look at that one I promised I was going to take a look at. What the hell did I just do? Duke. Yeah, I said I was going to do Duke Energy. Okay, I said I was going to do Duke Energy. This is going to be the last one. Devon Energy, DVN. All right, we'll take a look at that one another day. But I did promise Neil I'd take a look at Duke Energy. D-U-K. Yep. Okay, so I'm taking a look at Duke Energy. Duke Energy is a no. Sorry, it is. Monthly optional stock. 112. Okay, it doesn't even have a 112. The 110 is going for 390. Okay, at 113, I'm losing $3.11. Okay, $3.11. It means I'm walking away with 79 cents. On a $112 stock, I'm walking away with 79 cents for 5 weeks. Explain to me how a monthly is actually profitable. Yeah, I know. Bama Redneck Duke is a no. I have 50,000 in PLTR at 19. About 80,000 SBR. Gonna make a new position in Broadcom, 100K-ish, maybe. Well, Skilled Gamer, that's awesome for you. PLTR, no. SABR, no. Broadcom, no. No, no, no. Trifecta, dude, you got the hat trick. 75 DVN maybe next week, not this week. Okay? Thank you so much. Have a great night. Blessings. It's Pooh. Yeah, I'd say the same thing, but my word's a little bit more colorful than yours. All right, all that being said, it is 11:56. I'm definitely going to turn into a pumpkin. You guys have a great night. This is James from Dividend Stock Talk signing out, and we will catch you guys again tomorrow because the sun will come out tomorrow. Uh-oh, what am I doing? There and done. And end now. And end now.